Hello, everybody. Welcome back to another episode of The Market Open. It is Tuesday, August 6th, 3:45 p.m. Thank you, everybody, for being with me here today and spending your time with me. We've got a lot to talk about, a lot to get into in the global capital equity markets. And it truly is global because across the globe, if Japan collapses, we feel it in the United States. And if the United States market collapses, you feel it everywhere else. This is a global market with global things going on. We've got some global earnings after the bell. This is going to be one of the biggest earnings days we've had since the Microsoft Google day, or it was Microsoft AMD, where there were Starbucks, there were so many other companies. Today we've got Rivian, state of the consumer. Airbnb, state of the consumer. Toast, fintech for small businesses, state of the consumer. You've got SMCI, state of the semis. How are the semis really holding up? You've got a lot of companies. Instacart, another one, state of the consumer. I think today's earnings is primarily going to be predicated on how is the consumer doing? Why is the consumer bad in some areas, not bad in other areas? Or does Airbnb, Toast, Instacart tell us, no, the consumer's screwed? And if that's the case, that's obviously going to be bad news. So we've got a lot to dive into in the context of what those earnings are going to say, what those numbers are going to look like. And we'll see from the top line numbers if the consumer necessarily is bad or good. And that'll get us into all the other different earnings that we have to discuss from what happened this morning. Now at 4:30, I'm going to have Jason come on the show. We weren't able to do last week because we had a ton of earnings, but Jason will be on today, Paper Gains, and he is going to be breaking down a bunch of technicals. So any tickers that you guys are looking at, any tickers that you guys are excited about, we're going to be talking about Japan. He's been buying some Japanese stocks because he sees some value in the Toyotas, Mitsubishis, Nintendos of the world. So at about 4:30, after we get the majority of earnings done, we will be going all through the technicals and seeing what they look like for some of these equities that got re-rated. All right, let's get into it. Joseph says, Amit, you can't go live when I'm trying to catch up on the morning open live stream. Now I have to catch back up again. Thank you for being here. Really, also, by the way, for anyone who watches this after it's live, please leave a comment. Robinhood earnings is tomorrow. Robinhood earnings tomorrow. I know some people thought it was today. It's going to be tomorrow. So I'll be live tomorrow for that stream. Leave a comment on the video if you actually watch the stream when it's not live, because I know there's a lot of people that do, but definitely curious to see who watches it when it's not live and just like puts it on in the background while they're doing laundry or something. I'm happy I can assist you and entertain while you're doing laundry. Okay, so I did make some buys today. I bought 70 call contracts on Robinhood. I already had a pretty deep position for 2025 January $22, $25 spreads. I talked about it a couple days ago. I added 70 calls to that position. Look, I think this is stupid. I think it's really stupid. I think the price action is dumb. Robinhood, nice reversal today from 1620 all the way up to 1742 right now. I don't think it belongs anywhere near this range. I went over the math this morning. I think they're going to beat nicely tomorrow, and I think that earnings growth propels them closer to $22. Now, I could be wrong. Macro could shift. Japan could decide to blow up again. S&P could decide to just collapse. Like, anything could happen. But if those things do happen after the earnings we get tomorrow, when Robinhood basically slices their PE by 50 to 60%, I think that's a screaming buy the dip, and I will buy the dip again on that if it falls. I do think when we get the rate cut, Robinhood is going to benefit even more, but I think they can get back up to that $20 range on earnings, kind of similar to a lot of stocks that got hit really badly by this global market sell-off, which was carried by the yen carry trade, and now is starting to come back to normal, which is why Robinhood is up 6% today, because it has no business being there. The market knows that, and the question is now just going to be if they have the earnings results to show they can get back to that momentum. So that's what I bought, and that's pretty much the only thing I bought in my portfolio today. All right, let's talk about the state of the consumer. We have 10 minutes until we have earnings come out. So a couple of things I want to bring to everyone's attention. Uber crushed earnings today in the context of the consumer. Uber said the consumer is doing great. Shake Shack, I didn't even know they had earnings a couple days ago. They are up 6% today, 36% year to date, because consumers continue to eat there. So today after the bell, we're going to hear a lot from different companies, Airbnb, Toast, Instacart, on what is the state of the consumer. But if the labor market data was skewed last week due to the hurricane, this is Tom Lee's argument, and employment isn't as bad as we think. Employment's definitely weakening, but it's not like weakening to the point where like, oh my God, it's recession. And the consumer isn't completely falling apart. Caterpillar had great earnings today. They're up 4%. Uber, again, had great earnings. Shake Shack. And if the Japanese yen carry trade has done most of its damage, the VIX, by the way, VIX has completely collapsed today. So if you were short the VIX, congrats. 34% down after being up almost 200% yesterday. Dare I say the S&P has caught a bottom, and I'm not just saying that to say that. I'm saying that because historically, a day after the VIX spikes and then it collapses, the S&P's collapse tends to be the bottom. So I don't know, dude. It's starting to feel like we put this behind us, and this was a flash crash primarily based on Japan. The Japan over US dollar ratio is starting to stabilize. It's not going back to the 160s where it was at in the beginning of the year, but it started to go up a bit over the past couple of hours, and that's giving investors more confidence that it's okay for us to buy up US equities again. Bloomberg had a report. We're looking at the S&P 500 right now, up 1% of the day. At one point, S&P was 527, so it's up 1.4%. It was up almost 2% of the day. Bloomberg had a report that $14 billion were spent yesterday buying the dip from hedge funds. So smart money came in, decided to buy up the dip. Retail ended up selling off $1 billion of equities. And it kind of made sense. I mean, like, you had a lot of panic selling in some of these names that probably was because of retail. And so that was 2.5 standard deviations below the 12-month average for retail selling, which proves that it really was panic selling, right? If it's 2.5 standard deviations below the 12-month average on retail sales. And then institutional average was 2.9 standard deviations above the 12-month average in terms of net buying in one day, which was Monday, yesterday, August 5th. 14 billion for institutional, retail negative 1 billion. It seems like smart money feels, hey, the extent of this damage is done. Remember, the market is forward looking. So if they're looking forward, they are pricing all of this in. They're getting ready for a rate cut. And that rate cut hopefully is going to be the catalyst that markets need to continue to advance. So that's what we got going on. And look, I don't blame any retail that sold. Like, sometimes, you know, you got to maintain your cash. You got to raise cash from losers that you don't want in your portfolio. Get rid of them and just establish bigger names or bigger positions in names that you like. So it's not a big deal. But when there's that much net selling, that's how you know there's a little bit of panic taking place. And that panic obviously could be a big opportunity for other people as well. So that's what we got right now in the context of the consumer. And after the bell, we're going to see a lot more to see what happens. Do you think the sell-off included Iran-Israel tensions baked into the dip? Yes, but Iran still has not fully, they've done somewhat of an attack, but not like the way Iran was talking over the weekend, it sounded like they were going to launch a nuke. And so far, not fully there. Now, they did tell the United Kingdom that by Wednesday latest it would happen. Today's Tuesday, so I guess we have 24 hours until they fully unleash, which maybe that could be bad for the markets as well if that gets really bad or if that gets tough. There were drones launched from, or rockets launched from Hezbollah, but the Iron Dome in Israel has been doing a good job containing those. So the extent of that damage has not fully been baked into the markets yet because markets really haven't seen anything that crazy. But if that does happen, then I guess we'll figure it out over the next coming days and see if they actually have a bad attack. Jay says, I missed buying the early dip yesterday due to Schwab login issues. Yeah, I mean, there were a lot of people today on Twitter that were pissed off about this. A lot of people were upset because obviously the markets are rallying today, and you had some companies trading at just stupid prices. Meta was at $4.50. Palantir obviously got to $21. Robinhood was under 14 at one point. And so a lot of Schwab users, it did stop you from panic selling, but it also did stop you from buying the dip, which sucks. But it is what it is. It happens, and I guess now we just have to move forward. I think some of these names still are incredibly sold off. Now, Meta, not sold off anymore. Meta's up 5%, closing in on 500. I don't think it's sold off as aggressively as it was yesterday, but some of these names still have been taking a beating. Let's go to the Mag 7 before we get into earnings in 7 minutes. We've got Tesla recovering on the day at up 1%. It was at 192 at one point. NVIDIA, 105. That was at $100 this morning. Amazon, 162. Google, they're still down because of this antitrust lawsuit thing. I'm still looking into it. Seems like it's worse for Apple than Google, which is why Apple's down 1%, but markets are kind of congested, like digesting it, and they're moving on from it. So I don't know if it's going to be that big of a deal, but in the short term, a little bit of a headwind. Meta at 498, and then Microsoft here at 400. Microsoft down from 460. Microsoft looks way more attractive at 400. PE is still 33 on Microsoft, but obviously it's been re-rated and it's up from the lows of 385, which again yesterday was a pretty good deal if you were able to jump in. So that's what we have in the context of the Mag 7. SMCI. So let's look at semis today, and then I'll give you guys some earnings projections. Semis today, pretty much all green except Intel, which has just been a disaster, down another 1.3%. SMCI up 1.14. AMD down another 3%. AMD looks like it's about to go below 130. It was at 121 at one point, rebounded to 130. Still down 3%. NVIDIA at 105. Dell is down. They're firing another 12,000 people. Micron down 1.5. Micron, I feel bad for Micron. Micron was at 150. I know some people that were deep in calls on Micron, and the thesis wasn't wrong. It's just it was up 70% year to date buying calls before last earnings, and this is why I bought more Robinhood calls, because I would not be buying if it was at even $20 or above, right? Because then it would be up like 70% year to date. But it got sold off 40% in the past like month or 30%. So it's like the risk reward started to become very attractive. The risk reward on Micron when it was 158 or 140 just probably wasn't that attractive. Especially because they're selling a commoditized product. So Micron right here at $89. I think this one rebounds as well if NVIDIA does well, but we're going to have to wait another 3 weeks until NVIDIA earnings. And so semis might have to wait until NVIDIA reports. ARM is up 3% on the day. Taiwan Semi up 155, up 5%. Qualcomm up about a 1%, and Broadcom up 1.63% on the day as well. Z says, I hope SMCI boosts NVIDIA back up so NVIDIA can peak better after NVIDIA can pull earnings as well. Yeah, so the thing about SMCI, the street is projecting. Let me pull up the numbers. The street is projecting for SMCI today after the bell, $8 of EPS and $5.29 billion of revenue. They missed last time on revenue by 3.5%, and they beat by 13% on EPS. I don't expect them to have some fantastic beat, because at the end of the day, it is one of the quarters where semis tend to do bad, which is Q2 around the July-August time. But outside of that, it's all contingent on NVIDIA. So if SMCI has a massive beat, that should let us know NVIDIA is not going to play around when they have earnings. Again, how does the logical syllogism work? NVIDIA gets money from hyperscalers to buy their GPUs. You have to do a lot of cooling for those GPUs and maintain those servers. That's where SMCI and Dell step in. So if NVIDIA crushes, that means SMCI's demand, because NVIDIA is their largest customer, goes through the roof. But if NVIDIA doesn't, really crush, but they still crush, but it's not like crazy crush, then SMCI is going to put up the numbers that they're projected to put up. And if that's the case, we're not going to get some massive beat on SMCI. Rivian after the bell, we're expecting them to lose $1.21 and do $1.13 billion in revenue. Instacart, expecting them to make 13 cents a share. That would be their second quarter of profitability, if I'm not wrong on that, and $806 million. Toast FinTech, we're expecting them to lose 2 cents a share. So if they become profitable, that would be great for the street. $1.22 billion in revenue expected. Airbnb, we are expecting them to make 90 cents a share and do $2.73 billion in revenue. Last time they beat EPS by 86%. They beat revenue by 4%. Let me know if anyone owns any of these names. Let's make the watch list right now. Let me know if you own any of these names at all. Let's make the watch list here. We got the market close in 3 minutes. Today is 8/6. August. My mom and my sister finally go back to work tomorrow on August 7th. So I've been messing around with them because like the house is my office and I get to like do whatever I want the whole day when they're at school, because they both work in a school. And the whole summer, the past 6 weeks, I'll be done with the stream. My mom's like, hey, can you do this? Can you do this? Can you do this? And I'm like, I need to be working, but it's like I can't say no to my mom. So I was joking. Like I finally get the office back to myself, which is the entire house at this point. Okay, so we have Airbnb, we have Instacart, we have Toast. What else do we have? Rivian, SMCI. These are the big ones that I'm looking at. These are the big 5 that I'm looking at. And then we have Upstart as well. Upstart is an interesting one. Rate cuts are going to be good for them. They're up about 0.61% on the day. And that's pretty much it. Those are the big ones. I know there's some other ones, but those are the very big ones. Shopify is not today. Shopify is tomorrow after hours. Shopify's tomorrow. Amid, how do you feel about Hood earnings tomorrow? I think they're going to crush. I think they're absolutely going to crush. And I think they're going to do good. I think Vlad's got us, dude. I think they're going to introduce that new web trading app as well. Like that's a gut feeling that they're going to introduce that. I think they're going to like really present themselves strongly tomorrow and just, be like, hey, like, come on, $17. You're like $17. Come on now. So I think they'll be good, but we'll see. I could be wrong. And maybe it goes back down to 13 or something. Reddit does not have earnings today. Does it? Does Reddit have earnings today? We got the bell close in 45 seconds. Reddit. I'll put it on the list. I don't see it on my. I'll put it on the watch list, but I don't know if they have earnings. We'll see after the bell if they do have earnings, and then we'll cover it there. Okay, here we go. All right, Reddit's today. All right, so we got Reddit on the list. So these are big companies, all of them consumer basing. SMCI to some extent. Upstart is consumer for AI, insurance, loans, things of that nature. So all of these big on the state of the consumer. We're going to see in their numbers if we can kind of push back against this consumer narrative that McDonald's and Hershey's have started, and see if we can convince the market that the consumer is healthy enough to continue this bull run. Tuesday, August 6th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, here we go. So Reddit's already down. Well, no, Reddit closed the day down 4%. Interesting. So Reddit closed down 4%. All right, AMGN. I'll do this one for June. This is a pharmaceutical company, Amgen. That one will have earnings on as well. So Reddit ends down 4%. Upstart ends the day up 1%. SMCI up 1%. Rivian up 1%. Toast up 1%. Cart up 1%. So pretty much all these companies. Oh, Airbnb was up 4% today. Wow. All of these companies kind of didn't move too much besides Airbnb. So earnings is going to show some of the volatility that we have a little bit later as we get into the close. Okay, so no numbers yet. Let me pull up a bunch of different things I'm looking at and see if we get numbers. If there's any crazy moves, let me know in the chat. I don't see anything crazy yet after the bell. So numbers are still being digested. Amgen is down 1.69. Got a little bit of movement there. Yeah, we got Reddit. We got Reddit here. Reddit is up 2%. Otherwise, it might take a couple of minutes as well before we get to see some stronger numbers. Fortinet. Thank you for that. Forgot Fortinet. This is Steve likes this one. Cybersecurity. Fortinet's up 1%. SMCI moving just slightly. Let me adjust the chart here so we can see it better. Okay, here we go. Here we go. So SMCI is up 1.13%. So that's a little bit of a green candle. Rivian's up 2%. Rivian, we got a mover. Do we have a mover on Rivian? $15 after hours. Let me know if you own any of these names. Rivian has a little. SMCI is pumping? No, it's not, dude. SMCI is not pumping. At least not on Webull. It's not pumping. It's up 1%. Rivian is pumping a little bit, up 2%. Upstart's up 2%. Oh my God, Airbnb is down. Airbnb is down. Airbnb is down 7%. Wow, we got a red candle on Airbnb. We got a red candle on Airbnb. Wait, never mind. It's down 4%. It was down. It just went to 121. Now it's down 5%. Now it's basically down at those same levels. So Airbnb is the first one to fall. Okay, PayPal up 27%. Let's not joke around here. Let's be serious here. All right, so damn, Airbnb is getting smacked. Down 9%. Oh, it's down 10%. Oh boy. I guess the bookings for the Olympics and stuff, that doesn't come into Q3. So this is Q2. Let me see if I can get Airbnb numbers. Wow, that's not good. Why is Airbnb getting smacked? That could show a decline in travel potentially. Airbnb is a big company when it comes to travel. You don't want to see this one. I don't want to see Airbnb go down. Also we have Wynn Hotels. That's another one today. Wynn Resorts. So I think we're going to look at that one. Wow, Airbnb really taking a beating, bro. Goodness gracious. Reddit is up 10%. All right. Wow, Reddit's up 14%. I don't think Reddit was profitable last quarter. Or they were, but it was slightly. I think they've increased their profitability. Let's check. That's probably what's helping them right now. Reddit is up. Reddit's doing really nice, up 10%. Airbnb continuing to fall down 11%. Instacart down 3%. Rivian up 2%. The rest of them kind of flat. Okay, so let me see Airbnb. Do I have anything there? No numbers yet. No one has. Oh, here we go. All right, Airbnb earnings. Q2 revenue, $2.7 billion versus $2.74. They beat. They missed on EPS. 86 cents versus 92 cents. They missed on EPS. That might have to do more with their costs and their margin efficiencies when you miss on the bottom line versus the top line. Gross booking value of $21.2 billion versus $21.3. So they missed on that. That's a slight miss. And then they had 125 million nights in experience booked throughout the app in Q2, down 9%. I don't know, dude. Missing by EPS by 6 cents. That's enough to tank it 10%. I guess in this market, that's enough. Reddit's up 5% right here. Rivian is up 2.3. SMCI is still not moving. I think it takes till 410 to get those numbers, or 405. No numbers yet on that. Wynn is down 1%. Reddit now losing all of its gains. Reddit still, it's up 2%, but it was up 14% a couple minutes ago. Up 1% now. It might go red if this continues. Wow, Airbnb is down 13% or 12.3%. Wow. I'm sure people in the chat have used Airbnb a lot, right? Like Airbnb is not a dead brand. Airbnb is like, I used Airbnb like a month ago in California. Like Airbnb is, I guess it's not as big as the street wanted it to be, but it's not a broken company or anything like that. Toast is not Toast. That's why you join the market close, folks. You don't get that anywhere else. Toast is not Toast. I'll admit that was an easy one. That was a predictable one. I can do better than that. But Toast right here up 3.39%. Let me see if I can get their numbers. Let's see if CNBC has some numbers first, and then I'll try to pull up the rest of numbers. Okay, so we have Amgen. Let's go on Amgen. That's a pharmaceutical one, and then we'll get to the other ones. Let's get to the other ones.
Angelica. Hey, Morgan, we're seeing a mixed quarter here from Amgen. Their EPS coming a little light. It's $4.97 adjusted versus the $5.01 that analysts were expecting. But they did beat on revenue, and they are raising their full-year adjusted EPS guidance by about 10 cents. So they're now seeing a range of $9.10 to $9.20 a share, and the average estimate is $19.50. Where when you look at the different drugs here, we're seeing some weakness in their anti-inflammatory drugs like Otezla, but we are seeing some strength in cancer drugs. So
Upstart's up 20%. I'm getting those numbers.
We're going to hear more about that. They are noting that operating expenses are up, which is why you're seeing that weakness in adjusted EPS. But the big thing that we're really watching for is any updates on their obesity program. Remember, last quarter, they said that they are moving their experimental drug Maritide into phase 3 trials, and that sent the stock up quite a bit. So we're still waiting to see the actual results, and we're going to listen to that call later today to see what else we can find out. Morgan?
Okay, so Amgen, mixed results, not that exciting. Airbnb, we know, down 13%. Reddit, Q2 revenue up 54% year over year, 281 million. Daily active uniques are up 51%. Positive EBITDA at 39.5 million. Reddit currently is red. So Reddit is red, down 1%. Reddit was up 14% like 10 minutes ago. But okay, so Reddit's down. Now Upstart has the biggest move. I'm confused. Well, SMCI is not out yet. Upstart, I'm confused. 128 million. It's down 6% year over year. They're declining in revenue growth. Their fee revenue is declining 9% year over year. What is the street so excited? They lost money. They lost 54 million. GAAP net income loss was 54.5 million, down from 28 million in the second quarter. So they lost more money than they lost last year. What is the street excited about? Now Upstart's up 16%. They're unprofitable. They lost more money than they lost last year, unless I'm reading it wrong, but I don't think I am. And revenue was down 6%. What are they? They're expecting to still be unprofitable for Q3. The Upstart bulls, what am I missing? What am I missing in Upstart? Rate cuts? Yeah, rate cuts good for Upstart, but like, why on these earnings is Upstart pumping on a potential rate cut? Well, Upstart up 17%. Airbnb is getting demolished, down 14%. Airbnb is getting hit. Airbnb just lost about $12 billion in market cap. Amgen down 2.3%. Fortinet, it's up 9%. There you go. Fortinet's up. Cybersecurity, that's not bad. I'll get their numbers. They're up 10% now. So Fortinet showing some momentum. Reddit, I thought, had a great earnings. Reddit's getting punished, down 2%. Rivian's down 3%. Rivian's down 4%. Rivian's getting hit. SMCI, no numbers yet on SMCI. Rivian now down 5%. Rivian's getting hit. Rivian's getting hit. Okay, let me get Rivian first. Rivian probably is losing more money per car again, which is why they're getting hit. EPS of 127, revenue of 1.12 billion. So they missed on revenue. They beat on EPS. They're losing $1.27. They beat on revenues or they missed on revenues by 0.3. They beat on EPS by 13 cents. That's why Rivian is down 5%. So it looks like the beat on EPS was not enough for the street, given they missed on the revenue, even though the revenue was a slight miss. Instacart is up 7%. That's good for the consumer. We'll get those numbers in a second. Fortinet up 12% still. Fortinet doing okay. SMCI, that's the big one. I think we get it in 1 minute. So I think we get SMCI at 410. And then we'll know an SMCI. So Fortinet earnings, EPS of 49 cents, revenue of 1.43 billion, up 11% year over year. Record GAAP operating margin of 30%. That's great. GAAP net income was 378 million. That's up year over year by about a little bit over 100 million. This is great. That's phenomenal growth. CEO says in the second quarter, we successfully balanced growth and profitability as our non-GAAP operating margin increased 820 basis points. We are continuing to execute against our strategy. We expect to merge as one of the leaders in cybersecurity. Okay, that'll do it for you. Fortinet, not bad, up 11%. Shout out to Steve. This is a big one. He went big into Fortinet over some of the other cybersecurity plays. Rivian's falling now. Where's Rivian? Rivian's still down 3%. I'll get their numbers. SMCI is the big one that we're waiting on. Airbnb down 13%. Upstart, I'm still confused how the hell this thing is up 18%. Like, I don't understand it at all. I know it's a small cap. I know rate cuts will help them, but those numbers were bad, dude. Those were bad. Like, they were not good growth numbers, not even positive in the right direction type of growth numbers. It was just bad. So there's got to be something there that we're missing. SMCI still flat. We'll see if we get the number in a bit. Is the Rivian drop bullish for Tesla? You know, I think for Tesla to succeed, a lot of other EV companies need to succeed as well. At the end of the day, you need to normalize EVs, especially with the quote unquote EV winter we're seeing. So if Rivian dies, it's not like it destroys Tesla or anything like that, but I think even Elon would want EV companies to win. So I don't think it's the best thing for Tesla. Now, remember, Rivian got $5 billion from Volkswagen, I think a month and a half ago. So they got a ton of liquidity injected into them, which is why they're trading pretty much at cash right now. But it doesn't look like the street loves these numbers. Let me see if I can get Rivian, and then we'll get SMCI as well. Oh, here we go. All right, so we have Airbnb and Reddit. I will stop the video as soon as I have SMCI.
Slipping. They've been slipping since those numbers came out a few moments ago. Let me first get to the reason why. It is a weak revenue outlook. The company says that it sees third quarter revenue between $3.67, $3.73 billion. The street was looking for at least $3.84 billion. I did have a chance to chat with the CFO, Ellie Mertz. She said that the single biggest driver of that weaker than expected outlook is what they're seeing in lead times. They are shrinking, meaning that people are not booking as much in advance as they used to. And she said that that's true in the US and it's true around the globe. And I will just note that this is yet another hospitality company giving weak guidance and suggesting consumer uncertainty. Let me now give you those top line numbers. An EPS miss, 86 cents versus 92 cents expected. Revenue roughly in line, 2.75 billion, 2.74 billion was expected despite that EPS line. Adjusted EBITDA is beating. They got over $1 billion in free cash flow. So the quarter that just passed looks okay, but the quarter going forward is introducing some uncertainty. Back to you guys.
All right.
SMCI is down 4%. She's going down. She is going down. And she's down 3.6%. Up, recovering a little bit. Oh, there's a recovery. Little bit emotional. 1.94. It was almost down 5%. Now it's coming back a little bit. SMCI 605. Let me see if I can get the numbers. SMCI, again, we're expecting $8 of EPS. $8.10 actually of EPS. No numbers on it yet. Yeah, it's not completely hitting the fan yet. Airbnb is still down 13%. Reddit down 1.5. SMCI down 1.5. Are all the semis tanking? No, not yet. I'm gonna put NVIDIA on this list just to see if that's something we can track as well. SMCI really is flat, dude. NVIDIA 1%. NVIDIA's down 1% already, so that's probably because of SMCI. Okay, I don't have the numbers yet, but SMCI really not making a huge move up or down. No one has the numbers. Wow. So the street has them, but no one else has them. It's not on the website. No one has them on Twitter. Okay, so no one has the numbers. So this is the street. So I don't even think we've seen the move yet, guys. I think once the numbers go mainstream, we're going to see the news down almost 3% right now in SMCI. Our earnings even out. Earnings are definitely out. No, the 5 p.m. is their call, but I'm pretty sure their numbers are at 4:10, if not 4:15. I don't think their numbers are at 5 p.m. That's not. If I'm wrong about that, then I guess we're just getting a volatile move before that. But SMCI down 2% right now. Remember, SMCI is a hardware company, so margins not being the best. Oh, wait. Oh, no, I read that wrong. I thought it says 7.16. It says 1.76. Yeah, now it's getting a green candle. It hit 592 at one point. Now it's right back at 606. I think if we get earnings right now at 4:15, we're going to see an actual move on SMCI. Let's see. We're recovering. Airbnb is still down 14%. Toast is up 1%. Instacart up 8%. So Instacart crushed. Wynn Resorts down 1%. Fortinet up 10%. AMZN down 2%. Reddit down 1.8%. NVIDIA down 0.5% right now. Let's see if CNBC has it. Do they have it? No, they don't have it yet either. They have Instacart, but not the other one. Oh, there we go. Now we got some positive. Now we got some green. Now we got some green. Slight green, but it's green. 0.5. Again, this one matters for the semis. I don't think it's the only thing that matters, but it's one that gives us a little bit of insight into the semis. Now it's red. Now it's green. 0.43. It's flat. Hey, Dad, what do you do for a living? I talk about it if the traffic light is green or red, kids. That's what I do. Okay, SMCI down 1% now. Numbers, I don't have the numbers. The numbers aren't there. The numbers still are not. Yeah, numbers are not here. Maybe it does come out in a little bit. All right, let's get to a couple other earnings, and I'll come back with the numbers if it's out in a second.
We keep going. This is a happy story for longs at least. Shares are up more than 7%. It's a beat on the top and bottom lines. EPS coming in at 20 cents a share versus 13 expected. Revenue coming in at 823 million. 807 million was expected. And here's the thing that really matters: the outlook. This is looking good again for the long. Sees third quarter GTV, that's gross transactional volume, between 8.1 billion and 8.25 billion. The street was looking for $8.11 billion, and they expect the composition of this growth to be driven by more orders growth than AOV growth. And also they see third quarter adjusted EBITDA of 205 to 215 million versus 205 estimated. So these shares are surging in the after hours, up nearly 7.5%. Back to you guys.
AOV is average order value, for those that don't know, because I didn't know that a couple months ago. I was like, oh, that's what it is. So, dude, where the fuck are these SMCI numbers? Are they not coming out till 5? Why would they wait so long, dude? Like, what is going on here? That's not what you're supposed to do. I guess we're not getting them for 35 minutes unless it's at 4:30. Rivian's down 3.4. We looked at the Rivian numbers. They missed on revenue. They beat on EPS. Toast down 1.82. Instacart up 8%. We just saw those numbers. Fortinet, they had great numbers. And then Reddit down 2%, but Reddit had great numbers as well. Amit, do you expect to see NVIDIA 100 range this week and stay there? Well, we'll talk about that when Jason hops on in about 10 minutes, and we're going to go through a lot of the technicals for a bunch of these stocks that have obviously been corrected as per the NASDAQ fall down. Oh, NVIDIA's up 2%. Uh-oh. SMCI's up 11%. There we go. We got the green. Wow. It's about to hit 700. Oh, NVIDIA's pumping. NVIDIA is pumping. SMCI up 12%. Tell me they had a big beat. Tell me they had a big beat, baby. If they had a big beat, NVIDIA's going to have a bigger beat and save the markets. SMCI is a proxy for NVIDIA's growth. SMCI, EPS of 551, which is in line. Sales of 5.3 billion, which is a miss. Okay, if I'm reading this correctly, they missed on revenue. They beat on EPS. Stocks up 15%. Let me see if I can confirm with that. Let me see if I can confirm. Let me see. No, that was the wrong one. Okay, that was the wrong one. Wait, no, that was right. 7.6. Yeah, they didn't beat that hard on the numbers, but the stock, wow, dude. I'll get the numbers in a second. Stock at $710. Now, SMCI was $1,100 a couple months ago, so obviously it's taken a hit. NVIDIA back to 108. Yeah, NVIDIA up 4%. 4% on NVIDIA is a big deal, dude. Like 4% is like, I think it's close to $100 billion of a move on NVIDIA, or it's like 70 or 80 billion. So SMCI right here up 17% now. Goodness gracious. Stock split. There you go. Okay, that'll do it. That's probably the good news, even if the beat is not that good. What is the stock split? What is the stock split? Company announced a 10-for-1 split. So this thing's going to be $72 a share if it holds this level. Net sales of $5.3 billion versus 3.85, but the street was expecting 5.1. So I think that's a slight beat. Net income of $353 million. Gross margins of 11.2. All right, let me see if CNBC has the numbers as well. Get some clarity on that. Stock split is good. I mean, that'll help. That'll help. I think we have it right here. I think we have the numbers. Yeah, it seems like guidance was raised, correct?
Don, wanted to clarify some of those.
Do we have it yet? No. Okay, so CNBC will have it in a second. This is good. This is good for SMCI. Let me go on their website, see if I can get the actual numbers. See if I can get the actual numbers, news. Okay, not on their stuff yet. They are doing a 10-for-1. I'm trying to see if they reasonably beat revenue and EPS, because a lot of these tweets are giving me guidance, but they're not giving me fourth quarter fiscal year. Oh, that's why, because they're calling it fourth quarter. That's why. Okay, so gross margins. Here's the results. Here's for everyone to see. Gross margins of 11.2 versus 15.5%. So that's down year over year. Net income of $353 million. That's also down. 10-for-1 split. $5.31 billion versus 3.85. The street was expecting today $8.10 of EPS, and they were also expecting SMCI. They were also expecting 5.29. Okay, so it's a slight beat on revenue. It's a very slight beat. Big beat for them for fiscal year 2025 ending. Company expects net sales of 26 to 30 billion. Street was expecting low 20s. Okay, so that's the number. Thank you, Jose, for that. That's the number. So the EPS beat and the revenue beat are inconsequential. It's the guidance raise to about 30 billion. The street was expecting low 20s. That's like a $10 billion beat, if that's correct. That's why the stock's up 16%. That's why NVIDIA is up 3.5. Dude, if that's correct, and if that is how the street's interpreting it, NVIDIA is going to crush earnings. NVIDIA is going to smash earnings. Like if they're expecting a $7 to $8 billion full year revenue beat, if the street wanted low 20s and they're saying, hey, we're going to do 26 on the low end to probably 30, let's just assume they're doing 26 and the street wanted 22. That's a $4 billion revenue beat for fiscal year 2025 that SMCI just said they're going to do. Stock's up 13%. The only reason they're able to do that is because they have a shitload of GPUs that they have to serve. And those GPUs are because NVIDIA is selling a ton of GPUs. So that is very bullish for NVIDIA, very bullish for the broader AI bull market. They didn't beat on gross margins. That's down year over year. But I guess the market has never cared that SMCI is a hardware company and has 15% gross margins. So I doubt they're going to start caring, now about that stuff. Okay, here we go. We have some numbers. Let's get to this.
Well, let's get a check on Rivian. Those shares are falling despite beating revenue estimates and posting a smaller than expected loss in the second quarter results, down about 4.5% right now. Joining us now is Rivian CEO RJ Scaringe, along with our own Phil LeBeau. Phil.
Okay, so we got Rivian. I'll get more numbers on SMCI, but let's listen to Rivian CEO and see what he has to say.
Thank you, Morgan. RJ, let's start off with the second quarter. Smaller than expected loss. What are you noticing right now in terms of demand for your EVs in the market?
Yeah, we, as you saw for second quarter, our production was down. We made some changes to our production line to update the vehicle for our Gen 2 vehicles. But sales really exceeded what we produced because we continue to sell through our Gen 1 inventory. And we see a lot of excitement for the products. We're really pleased. Even just last week, we saw J.D. Power list us as the #1 brand in their annual appeal study. So we're continuing to see excitement around the product and certainly working to get more of those Generation 2 vehicles into customers' hands.
RJ, you end the quarter with just over $9 billion in liquidity. That includes $1 billion from Volkswagen with the deal you made in the quarter, and you've got another $4 billion on the way. Is that enough to get you through to R2 production in 2026?
We talked about this in the past. For us, the launch of R2 is really critical. It gives us a product that really allows us to access a customer that's much more price sensitive to get us into that sub.
Bro, can someone give this guy some crack? Like, how are you not excited? Like, you're the CEO of an EV company. Like, do some blow, do something, dude. Like, what is going on here? This is the most boring CEO I've ever heard in my life.
$50,000 price point. And the financing we have in place not only takes us through the launch of R2, but also takes us through positive cash flow.
It's great to have you on. I have an entire packet here of analyst notes, analyst questions, lots of them. Wall Street wants to know more about this VW partnership, what this looks like, why it's important, why it's happening now, the details around it, and how it's going to change the competitive landscape for Rivian.
This is something that we've certainly been at work at for a while, and it demonstrates the strength of the platform that we built, the electronic stack, the associated network architecture, and of course the software that's running on it. And we're really excited about the opportunity to take that platform between our electronics and our software and apply them on a global basis to a lot more products and to have that help drive the transition towards electric vehicles.
RJ, what do you see as the impact of perhaps a slowing consumer? Is your customer so high end and your market share in the position where you don't think it has an effect?
This is a big question on the consumer.
On you, or does it perhaps make the availability of more affordable options more important?
Yeah, I think it's hard to predict exactly what happens from a macro point of view. Certainly, we're watching it very closely. But as it pertains to our flagship product, the R1, it continues to be one of the best-selling vehicles over $70,000. We see that continue to be the case, and the excitement around the product and what it offers remain. But very importantly for us, as I said before, is R2. And R2 really represents an opportunity for a step change in volume as we introduce something that has a price point starting at $45,000. And
okay, so he really didn't answer that consumer question that well. That was, dude, you're not buying Rivian for the CEO, that's for sure. That was not an exciting listen there. But all right, whatever. Rivian, they did miss on a couple estimates. That's why they're down 2.84%. The stock has still had a great year, though. It was at almost $8 in January. Now it's at 14. So if you got it in the lows, you can't be too upset. Instacart up 7%. Airbnb is still down 13%. SMCI giving back some of those gains. It was up almost 15, 17%. Now it's up 9%. Still not bad, but giving up a little bit of that momentum. Is Dell pumping after hours on this news? NVIDIA is now up 3%. Dell is up 3%. Yeah, there you go. SMCI is helping out Dell, and it's helping out NVIDIA. Fortinet up 13. Cybersecurity, that's good. Reddit up 1.6, or sorry, down 1.6. And then Toast down 2.65. Real quick, I never got the Toast numbers. And then we'll have Jason on in about 2 minutes, and we're going to go through a ton of technicals. So if anyone has any tickers, please put them in the chat. Toast net income of $14 million. They're profitable year over year. Operating income of $5 million. Subscription services was up 27% year over year. Gross payment volume increased 26% year over year to $40.5 billion. CEO says, our team executed incredibly well in the second quarter and delivered strong results, including adding a record number of net locations and achieving GAAP profitability ahead of expectations. We are sustaining growth at scale while expanding margins by taking a disciplined approach to investing. We continue to see growth domestically across restaurant types while building on our momentum internationally and across exciting new verticals like food and beverage retail. Doesn't look like they're seeing consumer weakness. Remember, Toast is a platform for restaurants to be able to use, a tech platform for restaurants to easily engage with their consumers. So it seems like they feel that the restaurants keep paying them because the restaurants have enough demand. Here's some coverage on SMCI, and then we'll get into a bunch of technicals.
Now, Supermicro earnings, the AI hardware maker, are out. Stocks higher, but off the highs. Seema Modi has the numbers. Seema.
John, a 10-for-1 stock split is allowing investors to overlook a big quarterly miss on earnings of $6.25 adjusted. The street was looking for $8.07. The outlook, though, for its first quarter revenue was better than what Wall Street had forecasted, and its full year outlook much better, very strong for the full year. CEO Charles Liang says Supermicro continues to experience record demand for AI infrastructure, propelling its 2024 revenue up 110% year over year. Supermicro is a supplier to NVIDIA. It takes NVIDIA's chips and packages them into AI servers, which are then sold to the hyperscalers. The conference call is at 5 p.m. Eastern, and investors will be looking for any indication as to whether NVIDIA's Blackwell chip is delayed, given recent reports. And I would point out NVIDIA shares are also higher in overtime by around 4% on this report, guys.
Yeah, Seema, thank you. Got our eye on both of those. And we've got much more ahead on all of today's after hours action. Coming up, we're going to talk about
All right, so that's what you got with SMCI. So they missed by almost $2 on EPS, which is why initially the stock was down a bit, but then that full year guidance raise was awesome. The problem is SMCI just gave back a lot of their gains. I guess at the end of the day, this is more of a wait and see approach. The good thing is if they're increasing their full year guidance, you know, when like missing on EPS has to do more with the operations of the company in terms of them adjusting their costs, their margins, etc. NVIDIA doesn't have to worry about all that stuff. NVIDIA just needs to make sure demand is there. So if SMCI is increasing their full year guidance, it should mean the demand is solid for NVIDIA. And then it's just a question of, you know, do you want to bet on NVIDIA or SMCI? But it does seem to be a bit of an indicator for how NVIDIA will do. All right, let's get into some technicals. It's Technical Tuesday. As always, we're going to have Jason come on in just a second. Jason is becoming a regular guest every single Tuesday to break down technicals. So any tickers you guys care about will be on for the next hour. We'll go through as many as we can. And obviously, after the market has had its re-rating over the past week, there is probably new technical indicators to look at. And we'll try to navigate all of that. Jason, what's up?
Oh, what's up? I was just signing off on the chat, man. Man, what? I was just watching this SMCI thing. Every time this after hours move, all of these things, I was just telling the crew, we can celebrate because it's cool to watch. But I swear to God, every time it always makes you cry. None of it's really
every time, 100%.
Like no matter what it looks like, who knows? It's gonna come down to the morning. But hey, it's not getting decimated. That's good. That's good for sure. So I actually had a couple pairs trades on too. So I do have a Dell trade on. I actually also have a AMAT trade. They have earnings next week. So we'll see how those fare out. I was kind of bummed too about RJ. All he needed to say on this Rivian call was like, hey, look, these new models, we're making a lot of money on them. That's all he needed to say, just one time.
Dude, he needs to get laid or something. What's like, how is this guy like not like, dude, it's a public company. Like it's EVs. Like,
I mean, you know, some people are just kind of monotone, you know, he's like that. But I'm still here. Look, the stock still had a great year for sure. It's still actually it's not even down anymore. It's unchanged. This is what I mean. Like this after hours movement is just it's a very illiquid kind of market. So anyways, like all this stuff is kind of for naught. It's what matters is tomorrow morning, right? So when we look at the open, I mean, tomorrow is going to be a huge day for the market in general. SMCI earnings tonight, I think, was a big deal. I think that was a pretty good guide also, you know, the street wants margin. They're not going to get margin. Maybe that still holds Dell a little bit more down, but overall, I'm still a bigger bull on Dell than I am SMCI, but you know, it is what it is. But yeah, I think it's an important day to take a look at the technicals in general, like across the board, right? We've had a hell of a week, that's for sure.
So let me start with this, Jason. You can pull up your charts and we can get into it. I think we should just do SPY, quite frankly, to get started. But
yeah, I agree.
What is your take on? Give me your quick 2-minute take on what happened this week, not just from a macro perspective, but like how it re-rated the entire market from a technical perspective as well.
Re-rated?
Yeah, I mean S&P falling 10%. What does that mean for the broader?
So I think so the market, there's a lot of people in the market, like the talking heads, talking about you know, recession fears. I'm not in that camp. I'll just tell you that, right? To me, we had a recession, and that was last October. I think they're talking about recession being defined as 2 negative GDP prints, essentially, right? And we had that, actually. We had that late October. And then it was like revised away, if you remember. And the BLS reports, when I say BLS reports, we get the non-farm payroll reports and the jobs data, things like that. They have been absolutely horrendous. And I think, honestly, this is just my personal view, and I'll share my screens in just a little bit. My personal view is like, by the time the market figures out that was the recession, the mild recession, if you will, we're going to be coming out of it anyways. And that might take us a little bit, but in between now and then, in terms of market multiple or correction, what's up, Chris? I think that they're just realizing, the data that we thought that we had that said that we weren't really in a recession was wrong. So we have to reprice the market back to where it was. And we're just kind of like pulling back a lot of that in the meantime. But by the time it gets all hashed out, it won't be that long. And I think honestly, quite frankly, I seriously feel like, well, it's going to be over by then, and we're just going to be back to the upside. But that might not take us till like late. It could be like September, October, seasonally speaking, and that's the biggest thing, right? September is universally bad. That's the piece that we're really kind of fighting with right now. So I think, the jobs report that came out, 114,000 jobs last Friday. That's crazy. Number one, 4.3% unemployment. You have to take a step back on that. I think the yen carry trade is the truth about what's going on.
Were you doing that? Were you financing your options with yen interest and low rates?
No, I wasn't. I think there was a lot of that in the crypto market. I will say that I think there was a lot of that in the crypto market, and I really think that there was. It's probably. I think there was a note out today that's like it might be about halfway over. So that's more concerning. Like if this is halfway over, okay, fine. That's kind of what you have to be concerned about. But this is where we are. Generally speaking, on SPY, I think these are those October lows that I'm talking about right here. We had those two negative GDP reports that were more or less revised away. This is this prevailing uptrend for SPY that we've been in for the last year or so. And this day here, this is like the big break. So we broke it, come down, retest, fail again. You may or may not know, I use these things called NFP levels. And to me, maybe we talked about
NFTs?
it. Maybe
we're bringing NFTs back.
Non-farm payroll. So technically speaking, when we talk about non-farm payroll data, that sets the trend really for that month, fundamentally and technically. But how you use it, most people don't really understand. But this was that July non-farm payroll high, and so once we were not able to close over this, and we absolutely opened below, closed below, this was a huge flush day, and really like what we're looking at is we're pricing the market all the way back to March, right around here right now, which, honestly, that makes sense. This whole rally from March on was that low volume rally, which was sustained. But again, now we're back into that range. And it just, honestly, it looks like we're coming into that 200-day simple moving average.
Do you think 507 was the bottom given the VIX spiked on the same day?
Okay, so then when we have the VIX spike, and I'm trying to pull up my profile, like I did post something about it.
Jason, every time you talk, there's a lot of background noise. I don't know if the AC or something.
Yeah, hang on. I need an audio engineer.
If not, don't worry about it. But it's like every time you
No. I have an air conditioner on.
Okay, that's why.
That should be a lot better.
Oh, that's perfect. Oh, that's magic. Yeah. Oh, I'm happy I said something. All right, good.
So I think it's these three things in truth, right? So unwinding of the yield, the yen carry trade, number one. Unwinding of the yield curve, I think that's another one that's significant. So this is all back to rates, right? When we had the 2-10, so yield curve, meaning the 2-year yielding more than the 10-year yield, 10-year bond. When that first inverted, all the talking heads are like, oh, this is the biggest bear signal, most reliable, blah, blah. Wrong answer. It's actually not. But what is real, what's up, Bucker? What is real is that, when it uninverts, meaning that the 2-year starts to yield less than the 10-year again after a period of being inverted, that is actually a much more reliable signal. And that is what's happening right now. So if you look at the spread, if you look at a 2-year note yield and you look at a 10-year bond yield right now, those are very, very close. And they haven't been this close before, or since that inversion. And so we're really toying with a moment in time where we're about to uninvert. And quite frankly, tomorrow's bond auction, we get the 10-year bond. So tomorrow's auction, I think, whether or not it's a big auction or not, might be pretty significant for the market itself. So depending on where that lands the yield curve, that could be a big one. That on top of, over the weekend, we had a ton of geopolitical risk. There are bombs going off left and right. I think all of those things, put together, plus the talking heads yapping about recessions, which I'm not in that camp. I said, you can't be in the recession camp if you think IWM is going higher. Like, you can't be in that camp. But all of that, VIX at 50, VIX at 60, that was crazy. But look, that was a level where I hadn't seen a 50 handle on the VIX since pandemic. And I'm like, I look around, I'm like, where's the pandemic? I don't have it, right?
Well, I think that was the confusing part. We saw the VIX, the worst it's been in the past 4 years, but the thing that triggered it is Japan. Like what was this thing?
I think Japan was like gasoline on an ember, right? So there was a fire that was already kind of burning. It's really, the fire to me is this yield curve. The unwinding of the yield curve. That to me is the big one. Then the yen carry trade kind of like was the gas on the fire. The bears had the chance to celebrate. Here we go, and we're off to the races. And quite frankly, we've been net short from the trading perspective for a while. And so far I can't say that it's ready to stop just yet, unfortunately.
Okay, can we
I think that we're way closer to the end though.
I agree. Can we start with NVIDIA? We'll get into the tickers. Let's start with NVIDIA.
Yeah.
Do you think that 92 level was a very easy buy if you like NVIDIA?
No.
Okay. So you don't think that was the bottom?
So I think it was. First, it wasn't easy because it was so fast, man. It was so fast.
That's true.
It was so fast. I didn't see it. It was that fast. And I think most of it happened. I mean, how fast was it? Clearly, a lot of people were waiting for it. And this is $90.70. What we did have was this earnings report right here. Let me do this again where I make this a little bit bigger from a candle perspective. Hopefully maybe that's too big.
Yeah, that's good.
So this is earnings on, what is this, May? So this was one of those prior breakouts right over here. And what I do is I'll go back to that trusty kind of 30-minute chart. And all of this here becomes kind of like an important level. So 95. To me, it was 95.
It's so crazy, dude. During May, when it was 950, aka 95, like no one wanted to touch it. Now it's like if we get 95, it's like holy crap.
This is the thing. Then you have that 10-to-1 split, right? And it's like it turns into $100 stock. And there's this really weird phenomenon with $100 stocks where they'll chop from like 80 to 125 very quickly. And I hate to say it, I kind of feel like that's what we're looking at. So that brings us to NVIDIA here. Where was that? So this is a daily perspective. This is a proper pullback and retest just from a technical perspective. This is a daily chart. And so you have this top. So this is what we call like technically this is called an SR flip. So S and R, S meaning support, R meaning resistance. So this was resistance, prior resistance here at 95, give or take, and then becoming support later on. So resistance flipped to support. And I think, the problem I have is that we're still putting.
By the way, real quick, guys, SMCI is now red. So SMCI is dumping.
Stop it.
No, it's red, dude. It's fucking red.
I believe it.
Dude, they beat like $4 billion on the guidance. That's a big beat. Like that's a huge beat.
Yeah.
I guess the EPS miss was bad. All right.
Hey, look, it's still what matters is tomorrow morning. So we'll see. Right. But I do believe it because that's how this stuff happens, right? It's a super illiquid post-market type like trade. I think it was like a 70K market on close order for SMCI also. So they might be unwinding that in the after hours now, pushing it down a little bit. But so this is that support, that old resistance turned hopefully to support here. And this here in that 88 area, this is what we call like a point of control. Let's see. So I'll use this thing called a fixed range volume profile. So what I'm doing right now is I'm grabbing this area of consolidation, prior consolidation, and this now is giving me something similar. So how I have my volume profile over here, what this tool did was it just took this one snapshot in time. Where is the volume within this, what we call accumulation, where they were accumulating the stock, and that's going to sit you right around $90, right? And so that does become 89. So that does become a pretty nice level to trade against in the near term. So if we have, hopefully that holds. The problem I have right now is that it was too fast. So this was too fast of a 1 second test. What I really like to see is this to like sit in this range for a little bit, for a while, and build a net new base of investors. And so this, what I just did here, I think is actually legitimate. And this low is what I would call like a liquidity grab. And that's going to come in right over here. That's 80 on a big red day. It might be in the pre-market, it might be really fast. And then if I turn on our simple moving averages, that's going to line up with your 200-day simple moving average right here.
Oh, wow. Yeah. There you
So
go.
I think this is fine to start a position. I'll tell you that right now. I just think that like you should be ready to buy something a little bit closer to as close to 80, 90 as you can get in the near term. If you're looking to build a position or you don't have it and you want to own this, I think, I can tell you, I think it's around there. Over precision is kind of a killer, right? When it comes to trading. So, if you're trading NVIDIA, you're trying to get into NVIDIA and you think that you're going to hold it for 3 to 5 years and you think it's going to be a $200 stock. Do you really care whether it's $90 or $80? Probably not. Hopefully you're not splitting pennies. That's like tight. So that's, God.
SMCI goes back to $100. That's going to be hard. Okay,
we were talking about it too in our group. Was like shorted at 7. Oh god,
yeah, down from 1100. It's really incredible. Can we do Tesla?
Yeah, I think we need to do Tesla. So Tesla has given the entire move back, right?
By the way, Jason, someone said you sound like Steve-O. I agree. Have you ever listened to Steve-O?
I have gotten that before.
You legit sound like Steve-O.
I don't know how to change. It's
you
probably,
don't have to change it. I'm just saying you do.
I skated for a long time too, so I don't know how to change the. I need you to come over and mess with my audio settings here for a while. Help me out, man. But yeah, so Tesla, this is where we are. I think my problem right now is that I really wanted to see this upper level on Tesla hold over here. Which would be what, 230? It's the 200-day simple moving average. It's like 206, okay. Really. So 206. So here's where I am. Tesla had a great move to the upside. If it really comes back in to test this is not going to hold. Like this 190, 180 level, it's not going to hold. That's the problem. And I think a lot of people, when you talk about technical analysis and things like that, I heard you talking the other day. I was like, I don't know what the support is on something anymore, right? Because you lose a level and like immediately you start to think of like, what's the next level of support? Well, no, when you lose a level, it becomes a short. That's what happens, right? When you lose a level, it's no longer going up and it becomes a short. So when we say we're short or long, it's not that like, oh, we're bearish or anything. It's like we're trading level to level. Tesla here now, it needs to reclaim back. And this is where the market is. And this is why I say I think this moment where we are across the board is very pivotal. So this was Friday's close, right? And I think across the board, we've created these little gaps. And so this is from here, we'll call this a session gap 205. Tesla, as well as SPY, as well as Qs, as well as everything else, has this very similar gap right now. And, today in the pre-market, it looked great for a lot of people. And I posted something on my X, and I was like, the best case scenario for me as a bull would be to see yesterday's lows breach and closer towards the highs. That's not what happened today. That's not best case scenario. Today was actually closer to worst case scenario. Too far up, too fast, no good. So from this point on, we really need to see this kind of consolidate. But it looks like to me, it looks like the worst is over. Hopefully, and then tomorrow's 10-year yield is probably gonna. It's probably going to be a technical moment, a fundamental moment that's going to create another technical level. Yeah, and that's the reason is exactly what we're looking at on Tesla. I can show you the same exact thing on SPY, but basically across your charts, everything that you want to do right now is you want to go back to Friday's low, and what you want to see happen is you want to see the price action of the following days get back into last week's trading range. Otherwise, what we're doing when we just talked about that SR flip on NVIDIA where old resistance becomes support, it's the total opposite. Where if this was the old support, if it's now becoming resistance, that's what I'm looking at. So if it can't get back over an old support level, they become a short from a technical perspective. And this is SPY right now. This is that Friday low. Now you could probably see with a different perspective or a different pair of glasses, maybe, why today's move was a little bit more concerning, especially the close today, right? So this was Friday's low.
Yeah.
We needed to really be in here. Now what we have to see, it's not like it's bad, right? I think what's crazy about this market and with the VIX this high, what we're seeing is like these massive intraday moves. This is what we call like Volmageddon. And like we will have huge intraday moves. It's very hard for any swing trader in general. This is not the time to be taking like large bets. I think we talked about it last time on swing trades. Is it really?
I think yeah, it's down 5%, dude.
Oh my god. It was just up 15%, man.
Oh,
I told you guys it makes you cry if you look at it after hours.
Okay, can we do Robinhood for earnings?
Hold on. So this is important, right? So where we are on SPY, here's Monday's range. As long as we don't have a day, and I think this is the gap that's important, right? So from here to here, 511. So we have very similar on Qs, very similar on SPY. For the rest of the week, we might chop like this, right? And that's actually, it's not horrible. It's okay. This becomes kind of like your range for the week.
That would be healthy.
That would be healthy. That would actually be very healthy. Don't expect a breakout right now. That's why I say we're not trying to swing super long for the fences. The thing that we want to be very careful of, and I think you get your sketchbook out, whatever, write this down, 511 spot 14 on SPY. If you have a daily open below 511 spot 14 on SPY, and you start to go lower in early trade, it's going to be a bloodbath. I'm not joking. It's going to be an absolute, you're going to see a VIX back at 50. It's going to be a bloodbath. And so like that technically speaking, we're going to flush this whole range. And that's probably going to be the day that is like, okay, we buy. And that's why I'm saying, okay, this is very close to the end. But if you get this open below 511, it's going to be 496 very quickly.
What are the odds in your head, based on everything you think, that we test that level again? Would it have to be something fundamental that happens in Japan or
No,
random?
this is all this. I don't need fundamentals to make this happen. Right now, the technicals are telling me it's very close, right? Because and this is Qs is a very similar look. The level on Qs, that's very similar. When we have these big gaps like this in these are fundamental gaps from that non-farm payroll stuff. Essentially, what will happen on QQQ is if you have a daily open below 422, we're probably going to erase the whole year's gain in that session.
So I agree with that, but what my question is, what would cause the daily open on 422? That's where that's to be something.
It could be as simple as this. It could be as simple as a 10-year bond auction going not the way the market wants to see. A couple Fed speakers saying something, and we don't have any good news on the horizon in terms of the economic calendar. So the market's kind of like free willy right now. Whatever it wants to do, it can do. And then the rest of that carry trade flushes out essentially and brings us back to it. It would essentially bring us back to January. That's 400 on Qs.
Dude, wiping out the whole year would be wild, right? Like,
but would it though? Because I mean, you would think so.
You would think we're due for a big enough of a correction where that has happened at least once, right?
Yeah, I mean,
and it hasn't happened.
It does seem wild, but look, the other truth is that from like the October lows, we're up quite a bit, right? So from the October lows, we were up almost 50%, and so now we're really talking about what we're talking about. That would put us. So what I just did, sorry, let me take some of these lines off. What I just did was from the October lows, and this is a little extra confluence, that puts us in what's called like this golden pocket from a Fibonacci retrace perspective, right around 400 right here. So basically, if we lose this level of consolidation up in here, if this old support fails, it becomes a quick, very near-term short down to about 400, and then that trade is over. And then you start to look for it to kind of consolidate one more time and get long, actually, in my opinion. So where would you want to get long? Somewhere around there. And that would look like here's a big fail of this 200-day simple moving average, and it would look like a higher low on the daily. But I think it wouldn't. I don't think that we're going to spend a whole lot of time in that area, but it's probably going to be pretty painful if we do.
And something that could definitely cause that pain, obviously, would be NVIDIA having a crappy earnings, right?
I hope not. But yeah, that would absolutely do it for sure. Wow,
all right.
This is not a good look on SPY right now.
Yeah, SPY's, dude. So guys, in the after hours, we're seeing a little bit more of a, I don't want to say bloodbath, but we are seeing some pretty nasty moves.
Han Solo's apocalypse. It's Volmageddon is what we call this.
SMCI is down. What did the street hate so much about this call? Like, I know they missed on EPS, but what is so bad? Dude, this is $60 away from going below 500. And it's still up 100. SMCI was so had done so well. It is still up 100% year to date after being down 30% in the past 3 months, 40% in the past month alone. I mean,
this is why I laugh. Like, it's fun, like, to celebrate after hours for a minute, but like, don't celebrate early because you can't close.
Okay.
Oh, yeah. That is. I mean,
why don't we do some TA on this one? What do you think is happening here? It's giving.
I don't mean that's abnormal, actually. On which one?
Wow, we got Jason. I don't know what the fuck's going on.
On Super Micro. Actually, the reason we were talking about in our group, short of 700, this is this line right here. This is the prevailing downtrend. So connecting these highs right here, that's to the penny.
Wow.
Like, and it just happens. It happens to happen in the aftermarket. So that's unfortunate. That's insane precision. But that's what happens sometimes. That's exactly what from a technical. And I think because it's after hours, like you can get these like gross margin is kind of meh. Yeah, I feel like the street wants this gross margin on server business, but there's not a lot. There's not a lot of profit to be had ever in servers. It's just it's. I don't know if the market thinks that like servers are like a services business, but it's not a margin rich business. It's all about volume.
SMCI's demand is good for NVIDIA, but it's not like it's printing money for them. It's just what proxy, I think, for a lot of the semis.
Yeah.
Okay, can we do Robinhood? Let's do that.
Yeah. So I bought on the first 65 VIX bloodbath, I had a couple. My purchases were I bought Dell, I bought Robinhood, and I bought Palantir, and I bought Best Buy actually.
Oh,
but,
wow. I like all those.
What you do?
I like Best Buy. Yeah, I like that.
Yeah,
one.
really nice.
Best Buy actually has a legit AI strategy. People, I mean, if you listen to the CEO talk about it, they're happy.
Dude, Best Buy was like one of the first stocks I ever owned, actually.
Oh, I like it.
But I'm old too, so it was like in the late 90s, and the thing went from like $3 to like $30. It's crazy. Anyways, I think I don't like that Robinhood got into like this. We talked about early on Robinhood is that, I liked the fact that they didn't have that like extra Bitcoin proxy, but I can look across the board. I'm like, how is Robinhood not cleaning house right now? Like, there's no way in my mind that they're not cleaning house right now. Yeah. And we talked about Bitcoin also. So I don't think Bitcoin was a long. I still don't think it's a long. I think it is a Q4 thing. But with the yen carry trade like unwinding, I think there was a lot of that in crypto. Actually, I think there was a lot of that in crypto.
You think a lot of people financed yen to go long Bitcoin on leverage, and they got blown up in the past couple of weeks? Yeah,
I think a lot of Japanese did for sure. But we came in here to this is like $14. I think it was like, that's like, you kind of hammer that long. And that ties into this very last breakout retest right here. It was so quick right here.
I put in an order. I didn't know if it would get filled, but it thankfully got filled, but it was quick below 15.
Yeah. So here's the stuff. So when I mentioned earlier, these are all equity buys for me. No options, by the way. Like when you're talking about options, I think it's really important to understand like volatility is crazy. And depending on what you're looking at, like you might be more sensitive to volatility than not. So as long as even if you have a lot of time, they might get moves, but you might not see like a real profit that you would expect. You might not see the profit that you would normally expect to see when you have this type of elevated volatility. Doesn't mean that you're not going to make money. I'm not saying that.
Guys, we are not listening to the SMCI call. If you want to listen to that, you can go somewhere else, but we're not going to listen to them talk about their crappy gross margin. So
when I said about SMCI, look, I worked with SMCI for years. And I mean, I worked with them. And if there was one management team that I would put money on, like fumbling a really good earnings report, it would be the SMCI team. But anyways, that's in the enterprise. So it's not like your normal company, not ultra polished.
Yeah, if you want to listen to them, you can, but we're just going to go through more technicals.
Roasted.
Okay, so what level do you think we need to maintain here to get us?
It's right here. I think, honestly, so I think it's going to be when we start looking at technicals on these things. I think we need to start looking at technicals after earnings, because what happens is that the earnings calls are going to give us new fundamentals, and so the story may change. Technicals tell us about a story, right? And the story comes out really during the earnings call. So when you look at technicals for like ahead of earnings, I think it's kind of for naught. But for right now, what we have to see is we want to see it over 16. And quite frankly, this is a long ways away at this point. I mean, this is a proper shellacking on Hood for sure. But we really
would have to move 30% just to get back to the 20s, which is
yeah. But look at Palantir, right? It was the same. I bought Palantir the other day, and it was before earnings. It was equity, and I had bought it. Like I forgot, like $14 something. And then I sold it around 20, and I saw it coming back in. I was like, like 20, 21, 22, I'm like, okay, I sold it too early anyway. So it's like, I buy it back. And I think this is kind of the same kind of thing. If you were buying Robinhood around this, and if you had sold it around $13, $14 and you saw it instantly coming back around that same price, those people that like, I was like this with Palantir, I was like, okay, 20 something, low 20s, I'm going to buy back. Right. Cause I felt like I had missed a lot of it. And I think you saw basically a lot of this kind of dip buys. Now it's about, okay, are they really able to like put forth this increasing investor base or increasing like customer base? Are they making money? I mean, the Robinhood Gold Card I think is great. I don't want them to get mixed up with the like credit card providers. Like that's not a valuation that I want to see Robinhood carry, if that makes sense. But I think it's a good like free call option one more time, right? Like you could start piling on these features like this quote unquote moat that Robinhood's building.
What would you need a close on the open and a close for it to
post earnings? Post earnings, if this is back over 21, we're good to go.
And if we're below 16, it's watching.
If we're below 16, then we expect to chop between 22 and that 16 range.
Got it.
Until next quarter, really. And you kind of like play that range.
Got it. Okay, so that's Robinhood. I think we can quickly do Palantir. I don't know if there's anything too different.
I think it's super similar, right? So like here's Palantir. Oh, this is my actual Palantir chart. So it was, you know, we talked about this like support resistance, kind of the flipping, right? So it was this dip when I saw it. Hey, look, I sold it over here and I didn't get back into it. I think, yeah, I was buying probably over here, sold it, didn't buy it back here. Should have, could have, then I would have right there. So I think
you got the bottom yesterday.
Maybe, well, yesterday's bottom. Hopefully that's the bottom, right? We'll see. But I think it's similar, right? So at this point, we're back to where we were pre-earnings. Remember, 2750 holds that stands, right? And so we're not over 2750 yet. I think, you know, as a newer Palantir shareholder, I guess my intention wasn't to like sell it right away. So I wasn't trying to like be in it for a quick flip, although like it's hard to look at that and be like, oh, that's a huge move. But what we want to see that 2750 reclaim and hold again, because right now that old resistance that was support for that little while up here is now acting like resistance. So this is important, right? So where they were buying before that 2750 level, we want to see Palantir eventually like get back up over it. You know, are those buyers that were stepping in and buying around here around like 2650? They're not doing that right now. So it's a little bit lower, little bit lower. So now I want to kind of see this shelf hold. Okay. And if it's not this shelf, then it becomes a short, not like is a short-term trade short, but only for like $1.50, something like that. So you have to decide as a trader, is that worth it for you to trade? Right. For me, I would look at this and now I'm thinking, okay, well, if we lose something like a 2550 and I want to actually continue to hold this, I might sell something like 30-day, 20-day, like $30 calls, actually. Got it. Something like that. And maybe start to actually be like August 23rd. $30 calls. Not a whole lot of juice there. 25 cents. It's not horrible. 1%. 15 delta.
Okay.
It's
can we do let's do RCL real quick, the cruise.
So what makes you want to look at that today?
They're up today a lot.
Yeah, they had a massive candle this morning in the pre-market. It was the first thing I looked at. Is Chris still on?
7% today.
Chris is still on. Yes. Can you highlight that message from Chris? Fundamentals tell you what to buy. Technicals tell you when to buy. I think this is super crucial. And as we get into that, into this earnings season, this is when you tell, like, the fundamentals are telling us what to buy. On our space on our spaces the other day with the other like FinTwit crew. It was like, reiterate this point. Some of the fundamentals so far have told us we do want to buy Meta, right? We do want to buy some other things, but when is the real question? And so that's where we are, right? It's not, technicals are saying soon, but not yet. Royal Caribbean this morning, this moved so fast, and it was a lot in the pre-market. So what I'm going to do is I'm going to kind of rewind the chart for just a little bit. So this is a lot of times I'll have it like this. And so in the pre-market, this red line right here, sorry, just kind of ignore the rest of these lines for a second. But the red line right here, this is the 200-day simple moving average. It ping like sat right on it, right? And I didn't really listen to this report, but like this is a case of if the fundamentals told you that Royal Caribbean was a good report, it might have told you that you do want to own this, but the technicals were still telling you not yet, and to wait. So these simple moving averages, we've talked a lot about them over the last couple of weeks, but when you lose a 20-day, which is this gray line, and you lose a 50-day simple moving average, which is this blue line, when I say day, I'm talking about these are locked on the daily period. So it's a daily period simple moving average, not it's a basic simple, right? It's not like an EMA, it's just a simple moving average. You lose these two, the probability of going to a 200-day is pretty high, or at least getting really close. And that's what happened in the pre-market. And I'll just drop down, and I'm sure, I don't even know, was Chris watching this? Because in the pre-market, when I was watching this, it was like instantly going. Was it pre-market today? It moved really fast. I think there was this big, okay. So it was from 127 up to, it moved $10 up in the pre-market. And I thought it was just so fast, I didn't even think about it. Right. I knew it was at a good level, but it just ripped, man. That's insane. So I'm just doing the forward play here.
You thought this was healthy movement in the pre-markets? I mean, on their numbers?
Oh, maybe it was this day. So this day was a flush hit, and then that was this morning. This is the pre-market move. I don't know if it was. I'm just looking at this here, saying it's like, okay, earnings.
It's a good beat, 16% beat. It's not bad.
Yeah, I'd have to look at something else to really see.
Yeah, they had beat by 1% on revenue, 16% on EPS.
Yeah.
Yeah, there you go. Okay, so if that's the case.
So, but here's what happens. So you play this, what we call like moving average ping pong, and you bounce in between these simple moving averages now. So the 200-day has held, defended, and it's you typically go directly back to this 50-day. And so this range, like this failure here, becomes a short, and then this bounce becomes a long, but your target is only to here. And so here, this is target acquired. It's no longer, it's a neutral. It's in a neutral spot now. It's not a long, it's not a short anymore. It's more like you should have been long, and now your target's acquired, and now you let the stock rest. Does that make sense? Yeah. And so at this point, you're really kind of looking, it's probably going to chop around quite a bit. So I think this trade is over for now. The only time it would really become like back in. So this 50 days got to come in. This 20 days got to come in. And while that's happening, the chart has got to like chop like this. And then you'll get a moment where it's like, boom. And at that moment, this 200 day is going to be kind of like tightening. And this 20 and 50 day is going to, that's pretty much exactly what it's going to look like. But to get there, that means that this stock has to go sideways for a little while.
Got it. And then CCL, I would imagine, is kind of
CCL was the first thing I looked at initially. So when you see stuff like this, first thing you want to do is you want to think of what are the like like type of things. It was actually NCLH was the first thing I looked at. It didn't have the same kind of setup. Norwegian is at the lows. It looked bouncy, but it wasn't that strong. So then you went into CCL in the pre-market or like in early trade. And this was today. It was all looking at $15 calls. We have this same gap from Friday, right? So this is that same Friday gap. We're looking like, okay, this looks like it could get there. To me, like an upside here would be that 1579. So if this can get over, then you would go to that 1585. If you can get over 1585, then you get to 1683, and it's level to level. If you fail to get over a level, then it becomes a short back down to the prior low, and then stop again. And you just take that little piece of the pie. And I think this got there, but it didn't extend based on what I was seeing. And yeah, we're closing at the lows. So this now, so first of all, Royal Caribbean is not the same as Carnival or Norwegian. They just don't, these charts are not even similar, right? Like they're not even kind of similar. So if I look at a weekly chart of Carnival, right? And then I look at a weekly chart of Norwegian, those look NCLH, those look the same. But then you look at a weekly chart of Royal Caribbean, it's not. These are all-time highs.
Right. They are a bit different.
A little bit. So they're not even kind of similar. So that said, if you're to pick a cruise line to own, I mean, it's clearly Royal Caribbean, but this looks like this is done. And I think it's a lot to do with the payments and stuff that they took back in the day. But where it's landing right now from this low, I think this is what I have. So from this low to this high, ideally, look, it's not a breakout anymore, but it's right here. Like you don't want to see CCL or Norwegian breaking these lows, whatever these lows end up being.
Right.
So CCL's low is 1390. This is just technical. So if there's a fundamental story that's different, then that becomes true. But they look like barcodes.
Yeah, no, they actually do. They do. They're barcoding a little bit.
Okay,
Okay.
long-term barcode. So it's great. There's a base, but I don't know that they break out. This is the low end of the barcode. So if you want to trade the edges, then you trade back to the upside. This is that volume stuff. So this is the buy level on both of them, but it could go a little bit lower. And I think you look for it to kind of bounce again, but don't necessarily expect it to break out unless something else happens. This is summer though. I thought it was supposed to be like peak travel season.
No, it is. They're crushing on earnings. It's not an earnings.
Yeah. It's Airbnb's fault, right?
Well, Airbnb is down 12% as well. You know,
this was a weird one too. I was looking at it. This is one where like you can look at this on a daily scale. This was Airbnb, and at 120, where it closed today, technically this looks like a spot you'd like to get long. But then this is why charts do you not a lot of good when it comes to earnings, because there's something that happens, the market's not really happy. Now you go back into this range down to like
Airbnb stock has never been good to investors. It's been good for the VCs.
People love it though, right? They're like, oh,
people
it's
love the product. Yeah.
Love
the product. Yeah. Okay. Can we do Amazon? Can we do Amazon?
Yeah.
And before you do that, guys, please make sure to follow Jason. I'm just putting his Twitter in the chat. All of his information, Discord, all that good stuff is in his Twitter bio. So if you're on Twitter, please make sure to follow him there and you can check out all the stuff. Okay, so Amazon at earnings, they crushed, missed on a couple of metrics, and then the NASDAQ fell 10%. So what is your take on Amazon right now?
There's more than 10% now. but yeah, no, sure. So Amazon is one of those where like, if there's going to be a beneficiary across the board and you still believe in the AI like theme and general compute, I think this is a place that you want to be. So that's my personal take. Bezos is a brick wall at 200. We know that he's not going around. Do you know if Bezos has sold anything under 200? Can somebody pull that up?
I'm pretty sure he sold at 194 2 weeks ago. I could be wrong, but
Did
wouldn't
he?
be sold below 200. Yeah, 100%. I don't think he only sold at 200. Maybe it was like 198, 197, so it's basically 200.
Is SMCI down really 11%?
11%.
Is that
Dude,
real?
if SMCI unwinds this year and it goes from up like 500% to down 20% for the year. Oh my God, that's
I don't think he did though.
Bezos. Let me see if I can pull it up. Bezos.
So I think there was this very weird kind of thing where Bezos filed for all the sales, but I don't think if you look up his sales, I didn't see a single sale below 200.
Interesting.
I think it's a real thing.
You think so? At 200, that's where he stops.
He's called the crew and said, look, every time you see 200, sell as much as you can.
Yeah, you're right. No, you're right. The lowest was 200.00.
Yeah. And that was, you know what day that was? That was like this day. Like that day right there.
Yeah.
So if he was selling in any point of this, then I would be like, okay, I feel a little bit better. But because he didn't, and I don't think he did, it's still back in his consumer like drawdown. But we have to know that I think he's about 30% done, or he might have filed for more cents, but I think he's about 30 or so % done with his sales. Last I checked. And you and I had a conversation on this one. I had like 165-ish right here for this area. And I just bought this the other day. It was 165. And this day before the actual nastiness. I actually would like to see 160 hold. I have this really weird thing, and this is not technical, but whenever Amazon is less than Google without the L, with the L, yeah. Whenever Amazon is less than Google with the L, I think that's your buy right now. Google with an L. These are Class A shares. I don't buy the stand like preferred stock. I'll take this. I don't do the one with no L. So it's a weird thing. It usually ends up being a good buy. It's not quite there. It's real close.
So what you wanted at what, 145-ish around that range?
I don't want to see that, right? I just picked it up. I was looking for this kind of area here. It's 166 area to start to hold. We're below the 200-day simple moving average, which is like, it happens. I would like to see that reclaim sooner than later. At this point, what we've done is we've kind of like pulled the stock back to essentially February, right in here. So hope is not a great strategy.
It's not.
I'm catching myself saying hope a lot. I didn't want to do this, and I did do this on Google. So let's say you bought Amazon at the lows at $80, right? I guess the question is like, so 50% from the lows is about 140. And this is at this point, because if we're talking about an actual correction, this is actually what we should be looking at.
Right. Right.
These type of things. It's not out of the ordinary to see some kind of pullback like that. As an aside, that puts Google about 140 also. And so like I bought initially here. If that doesn't hold, I'm not going to sell, but I'm not going to, for me, I'm not going to buy it at 150 or 160. That doesn't make sense. That doesn't really put a dent in my average. I can't really, if I buy, I want to buy more than I bought the last time. And so I would be looking at that 140 level in here, if that makes sense.
And same for Google for you as well, you think?
I don't want Google.
You don't want Google. Okay.
I sold Google. I'm not
You don't like Google? You don't like their monopoly on search? You don't think that's a moat?
I don't like the CEO, dude. I sold Google because they just botched the AI rollouts too many times, right? Like I bought it on the first, like I bought it with everybody else right around $90, right? Right in here. and that's where I bought it. But like, fool me once, fine. Fool me twice. This was fool me the third time, and I'm like, or
But
actually,
this was not Google's fault.
I sold it. I sold it right here.
Okay, at 140. So when it got to 190, did you think you messed up, or did you think the market was wrong?
I did. But
So
you know what?
Why not buy back in then?
Because I bought Apple at 165 instead, and it was a much better deal. But you know, I basically swapped my Google for Apple. At this point, like, we're coming into a pretty important level on Google, but yeah, we can do that same kind of exercise. Say, look, if you're taking from these lows, it does put it right around 140 on Google as well, give or take.
Right.
And Apple is similar. So I think we talked about Apple, by the way.
Real quick before you get into this, what did you think of? You're big in Apple. What did you think of Buffett selling?
You know, go to my YouTube, guys, and there's like, we do a weekly trade plan every Monday, right after yours. So we're like, Amit's ends, mine starts, and we do like this weekly trade. I talked about it a little bit. Look, I honestly believe, I mean, at the end of the day, Buffett's probably he's, you know, slowly taking a step back, but it's a company, right? Like, they have to incentivize people to buy Berkshire shares. And I could even look at it and be like, look, if he hadn't have sold, Apple was going to be 50% of his holdings. And even like myself as an investor, I can look at Berkshire and be like, why would I go out and buy Berkshire? Why would I give Berkshire my money if what they own is 50% or more of Apple? Why wouldn't I just go buy Apple?
Yeah.
And so, like, honestly, honestly, that makes a lot of sense to me in the grand scheme of things. That makes real sense to me. The taxes stuff, yeah, he's up a lot, yes. And like, by having a big cash pile, it gives people like that, ooh, here's a carrot, right? I might be able to buy something that you can't, and I might have something at the ready. And so, like, having that giant cash pile, like, I think those are record levels.
You don't think he thought Apple got overvalued?
I mean, I thought Apple got overvalued, but I don't think that he was necessarily like, I somehow like sold like literally right here. I don't know that the filings that we get are way late. So he might've been selling all of this for all I know.
Yeah.
Right.
Yeah.
Like legitimately, he might've been selling all in here, that 215s, and had been long gone since that last run.
Dude, it's wild because the whole narrative changed after WWDC with the consumer AI focus. And then Buffett's just gone 50%. I mean, it was a real.
But it's still his largest holding. Let's get it straight, right? It's still his largest holding. He doesn't have anything else that's even close to it. Not even close to it. But you know, he cut it in half. It doesn't sound good. It's a great headline for an Apple bear. But you know, at the end of the day, dude, I don't even need the AI phone. I would like the AI phone, but I'll probably get a new app. I'll probably get a new phone without the AI in it, and just for the flip.
That's the flip. You like the retro feel?
Well, I might like the fold actually a little bit better, but yeah, it's. I haven't upgraded my iPhone in forever. So we have to upgrade the whole family's iPhones anyways. So that's coming. Whether or not I get an AI phone, I don't know, but I have to do that like this year, like ASAP.
Okay. So what are the technicals saying?
So technicals on our space, I said around 195. So that would be a proper, very similar to Google, right? Where like you have this big breakout. By the way, that breakout is played out, pattern is complete. Breakout meaning like when you look at this, and you zoom out, what we had was like this kind of consolidation breakout that plays out. Breakout is complete. Now we come in, and usually when we have what happens with traders, and especially when it comes to options, we could do another one later on. Like if you guys have questions about volatility and stuff, I can answer that stuff. People lose money when they're trading because they don't sell. Right. And they don't have, if you're going to trade, a trade has a beginning, a middle, and most importantly, an end. Right. And so the trade should have ended right over here when you had that kind of like double this consolidation move. It's literally, that's literally double this right there. So your trade was done. And now you're looking to come back, retest. And so you're looking for, to me, big run to the downside now. Best case scenario for Apple is that we kind of chop around this 200 level, maybe breach it just a little bit, and then head back to the upside. As anticipation into that September event, which may end up being a sell the news, by the way. But I think we end up basing somewhere around 200. I'd be looking at liquidity grabs sub 195 at this point. Again, when we hit that 195, by the way, that was like a perfect tag Monday morning, but the bounce is like too strong, too fast. Give it a second. Let these charts breathe for a minute. If you need to take the week off, take the week off. This is a great week to take off because everything's a bit overpriced when it comes to options. But yeah, we want to see this create like a net new kind of base somewhere in this level. It can even breach this a little bit, which would look like a liquidity grab down to 192.50s.
So you like, you think it's a buy in the 190s? If it gets there again.
Yeah, I think it's so not like just hammer buy. No. So what you want to see if you're looking for this is actually you want to see this breach come down like this, and then you want to see it go like this. You want to see it hit the 190s and then get back over the 196.50s and then boom, go. Right. That's a buy, right? I don't want to go shooting for a falling knife here because worst case, this happens. I don't want that. That's very possible. So just because it's here from a trading perspective, no, I don't want that. I would take that. So I'm going to do something on. So I'm going to put something like this here. This is what a position looks like. So you would buy right here when you would not buy here. You would buy after it kind of comes back down lows. Breaks it. So if this is the high, it makes a higher high, locks in a higher low. Then you get long on the higher low after a higher high. And then you go and you're looking for this kind of gap fill right here and possibly extending all the way up there into that September event.
Okay. Can we do a new one? One that some people are interested in, other people are loading up, other people I don't think they like it too much, and then we should do CleanSpark after that. But Intel.
Oh, I was gonna say this is broken chart, by the way. But well, okay. So what was yours?
Okay, we'll do Intel then CleanSpark. Intel. And do you think Intel is worth developing a heavy position on?
Heavy?
Yeah, like thousands of shares, a couple thousand shares. Let's say 3,000 shares, 4,000 shares. Would you get excited for Intel there?
Let's say 6-figure position. I mean,
down 30%, worst since 1982.
I think it really becomes. I don't think you're going to have a problem there.
Something tells me you're really hesitant to buy.
I mean, if I owned Intel, I would. I was long Intel options for a little bit, and I tell you what, man, I've never prayed for a China attack on Taiwan so much ever.
It's so bad. That's so bad. But
it's bad.
Such a good one. It's a good one, but it's so bad.
It's true, man.
Could you imagine you're loaded up the ass with leverage on Intel options and you're praying to God that China attacks Taiwan?
Hey, that actually happened though. That's why it's bad, right? Sorry guys.
You must have been happy when Trump said he's done with Taiwan. Intel's up 10%. There you go.
Yeah. But I mean, that's the trade that you have to you have to believe that. I think I do believe that. I think it's highly probable. I mean, I think it's more likely than not. The question is when, right? The question is when. So here's where we are. Let's.
I mean, you say the question is when, but the thing's down 30%. If not now, then when?
Yeah. And so let's say they do, but so then what happens to the stock? Does it go to 25? Right? Or does it go to
goes up
to what? Right? To 55 to 25? I don't know. right? So to put depending, it depends on your, so dollar total net dollars is kind of arbitrary. So if we talk in percentage of portfolio, I think that's more appropriate. Like if it would I put more than 10% of a allocation in there? No. Do I think it's worth like a mid-single digit allocation? Yeah. I think that's fine as a flyer, right?
Why? Betting on the reversion to the mean?
If it's a small digit allocation, single digit allocation in a portfolio, I think that's fine, right? Not just the mean, but like in case China attacks Taiwan, really. That's honestly, that's the real, that's it. So, I mean, that said, like, look, Intel's done an amazing job at like going really red on their chart. Like if you've bought this thing anytime in the last decade, you're now red. I mean, it's amazing. But this is that level where they were allocating in the early 2000s and late 90s. So it is what it is, right? I think the momentum that this has, this is the troubling thing. With the level of momentum that this has coming into this, something's wrong. Something's legitimately wrong. The chart's telling you something's wrong. But you need to hold right here. This is it, right?
They should buy some Bitcoin. That's what they should do.
Not yet.
Get their chart in a better place.
Yeah.
Well, the founder business is not going to be profitable for a couple of years, and I think investors just don't want to wait at this point.
So I think that's it, right? It becomes the opportunity cost. So to my point is it worth a flyer? Yeah. Is it like, I think so. Just from like, what's this trading to cash? Really? Like, I mean, this is.
That's a good point. Intel is a $90 billion market cap, I think.
I think at this point, it like becomes like one of those things where you look at it and like, dude, if they liquidated Intel, like, would you get more than the stock is trading for?
They have $20 billion in cash. Market cap's $85 billion.
Yeah. So I think that becomes, this is like a value trap. This is a value trap, but like you have to be a deep value type investor to get there. But it's all right here. So this level 19 and change has to hold. Got to hold, right? Yeah. Call it 18. I have what did this come up as 1896.
Right.
And this is weekly, right? Like if you get a weekly open below $18, like you just know, all right, we're going to $15. Like, but at that point you're down so much. Like, do you do anything with it?
Yeah.
I don't know. I saw a couple of guys asking for a Costco.
Yeah, let's do Costco.
I mean, it's an amazing chart for sure. Weekly coming down. This is going to come in right here, right now, 787. That's the weekly view. Oh shoot! Look at that, guys. It already happened. So it's not. I think it's still going to happen. I think you're still going to get that pop. So what happens? Like you get these things to get there. So 77 tag right there, really close right here. You're nowhere close to the 50-day or the 200 anymore. This looks like it could be in trouble. So here's how this is going to go down. You don't have earnings until September. What we're going to do is we're going to take this. This could be a real legit trade. So whoever mentioned this stock, thank you, because I actually might take something here. So what we're going to look at is we're going to look at this consolidation up here and around this 850 level. And what could happen is like the stock market could look great. Everything could look fine. People are going to go all excited. Oh, we're back up to where we were. Don't celebrate too early, right? You're going to have bears that are going to come in right away and be like, oh, I need to get out, right? Because my losses aren't so bad. It's come up a little bit. And I think a wick like this on Costco, this daily wick, when I say wick, like closing, like pushing really high, but not able to get over, really over like this level right here, 825. I think it's battling right here, 825. So if you see it up here, I think this is a better risk reward short. And honestly, I would be more inclined to think that this is going to come down, man. I know it's a great company.
I mean, they've had a decent earnings. They did miss on revenue last quarter, but
and they just increased their
the special dividend, the buyback. Yeah, that's true.
So I did a couple of things. So here's this October low, right? Upside trend line. This could chop sideways for a little bit. I think if this comes in like this, it could hit this, and then at some point, if you breach this trend line, now I'm going to zoom in. Oh, dude, this is in a dangerous spot.
Okay, so Savage, thank you for the super chat. He says, I took a $900 call for January 2025. Do you like that call, Jason, or
me?
Yeah.
So this is how we do it. So Costco, first of all, has earnings September, January 2025. Those are not cheap calls. Is that how most of you guys trade?
Costco 900. Yeah, I mean, what's the difference between buying the stock here versus the call? I mean, I know it's out of the money.
That's my first question.
Yeah. Yeah, Savage, if you want to explain your logic behind that in the chat, what's the reason you picked that strike in particular?
Well, you got 35 delta, so that means that you're synthetically equivalent to 35 shares, so that's fine. You'll have some at the money calls.
On retail.
Loss is limited.
Okay.
Versus 35 shares.
It's going to depend on earnings is basically your argument here.
Well, the good thing is you're post dividend, right? So a lot of times when you have dividends on stocks like this, that can really like put a little kibosh on your trades. Here's what I say is you have to hold, have to hold this upside trend line here. And you really need to get back up over this. Like right now, this is in danger zone. It's in heavy danger zone of being a heavy short.
And what really hurts them is if they come out.
When I say heavy short, I'm talking about like 720.
Okay. Yeah, if they struggle with the consumer as well, if they come out and say, "Hey, consumer's weak," that's a death blow to Costco.
Yeah, but I mean, what's good at least is that they're not. I mean, they're like upper middle class type.
Well, they're the place you go when you're struggling a little bit as well, right? To get more Whole Foods.
Well, I mean, you got to buy their membership for sure.
Yeah.
So what I'd say, whoever was there, is that here's your. Let me clean this up. Sorry, I got a lot of lines, but this is how it goes. You can't see this below. To hold your uptrend, you need to see 800 hold. You got to see it. You can't see this below 800. Below 800, just no. See you later. Bye. Flip that into a credit spread, quite frankly. And then look for this to kind of like pull back and below. When I say credit spread, I mean it's not a long. I don't mean it's a short right away. It's a big short for sure below 785. And that becomes like a pretty large short down to fill this gap to 736, which may or may not become an earnings thing. But the longer that this goes sideways, the worse that a January type call is going to be, because you're just going to start to decay, if that makes sense. And the more likely that you have something like this happen in all reality towards that later, like as you get closer towards the end of the year. So I know it's 165 days to expiration. Just you don't usually want to carry options like to expiration by any means. Usually,
when do you usually sell out of your calls? 6 months or a month before? What's the latest you would hold a call to expiration?
So first of all, if you're asking that question, you didn't have a price target. So you take it down when you have when you hit your target from a price perspective, and then we have these things called time stops, right? And so time stops are, I'm going to give. And these are parameters when you start to have a trade, like a trading plan. I think that Costco is going to go to X dollars by Y date. And that's typically like your expiration. But from a swing trading perspective, you usually you could buy double the amount of time that you think it's going to take. And so if it's 160 days, I would say like a month and a half max on something like this, because decay, like you don't want to have, there's this weird thing, 45 days to expiration. Anything less than that, your decay starts to come in pretty hot and heavy.
Yeah.
And that's that magic. It's like a 42 DTE. That's a magic number. You don't want to get that close to it. And then the second thing, that's from a time decay, which is probably the least important factor of all options. Like people think about that. It's the least important thing. The most important thing is called like delta decay, or another factor called charm. People don't talk about that. But if you start out at a $900 call, and remember early on, I said options are based on the probability of something expiring at the money. Super important. Options are priced based on the probability of something expiring at the money. If today you have 160 days to expiration, but in 45 days from now, or let's say 2 months from now, you have 100 days to expiration, the probability of you getting to 900, if it's still trading at the same price, is almost half. And so your delta, while that might start at 35, bet you what, that's going to be 30, that's going to be 15 in 60 days or 45 days. So your delta decay is significantly more important. That means that when you get in a situation like that, all of a sudden the price might start to go into your favor, but your option's never going to recover, and has nothing to do with time decay. It's all about delta decay and volatility. And the longer that something stays at that price point, volatility is also going down at the same time. So it's no good.
Now, what real quick, what if you were in the money? What if it's at $900 in the next 2 weeks, but you want to maximize the potential of the gain? Would you hold it until expiration, assuming no event happens?
No. So options are all about velocity and like exponential gains. So you buy options, one, to limit your risk or your exposure, but also like the other benefit of options are those exponential gains. So it's about what we call gamma. So it's not about delta per se, but it's about how fast delta can increase on an option contract. And there's a sweet spot on options, and that's about that 35 to 25 delta. Those are any out of the money contracts are going to start typically going to be around that 35 to 25 delta out of the money. You plan to take the majority down at the money, and that's always, no matter how much time you buy, that's always going to end up being a 50 delta. And then you lose the exponential gains. Like there's not a whole lot of benefit to hold options too deep in the money. So your max delta for me that you'd really ever want to hold is like 70, 80 maximum delta. I don't want to hold anything, especially if it has a lot of time. If you've ever been in long dated calls, if you've been in long dated, deep in the money calls, and I say deep, anything deeper than 70 delta, the bid ask spread, that's an option trader's number one cost. The bid ask spread becomes more significant than any price action that you could actually see. So like I can look at those Costco January 900 calls. The bid ask spread right now, it's about, it looks about $70. But if I were to go to a 70 delta contract, that'd be about a 750 call. Just take a look at that 750 call. You're talking about $70 bid ask spread, a 75 delta in the money January call has over $500 bid ask spread. $500. That's not a little bit. So the deeper in the money that you go, the wider that bid ask spread becomes, and the less convexity that you get. That's the word I'm trying. So options about convexity. You lose the convexity at about 70 delta in the money.
Okay, this is gold. And Savage says that right here. Jason is blowing my mind right now. I'm putting Jason's Twitter in the chat. That's where you guys can get his Discord and all that stuff. And he'll break down even more of this in his Discord. Jason, we got two more we really got to do because two people requested it. One is PLMR, real quick. I don't know
who was asking for that.
The Big Sour.
Big Sour. PLMR.
You know this one? Is this a thing? PLMR?
No, dude, no. I have no idea.
Might be a penny stock.
No, it's not. Not a penny stock. Let me do this real quick.
Palomar.
Insurance.
Yeah, some of you guys just find these companies somehow. You just find them and you put it in the chat.
So insurance is
Talking
not a
every
bad
day.
place to be, right? So if you think, I think, so if there's a safe, if you want to, if you're kind of concerned about like what's going on, a lot of people will DM me lately. Where do I go? I was like, gold's number one if you're in the conflict like area. And then a lot of this rotation we talked about, I think it's small cap, but like clearly that's pulled back. Value becomes like the other place. And so where that lands is actually insurance. So this is a good area to be. I think right now. So I'll just from that perspective alone.
Market cap on this is 2.3 billion.
It's not a petty stock, but it's down there. The technicals look good. Actually,
How do you see this in 2 seconds and say the technicals look good? Like, how do you do that?
So I'm way out there, right? And so what I'm looking at is like you look at this kind of like big basing formation here.
It's like a happy face. It's like a smile.
Yeah, you like a big happy face, and then and you can grab this. This is a weekly, right, time frame, and so this looks good. So this you can look at this kind of setup and say, okay, we could even look at Apple stuff, right? Like had something very similar. You're coming in. So here's my concern about value right now is that like since I do believe that we're very close to the lows, right? If we get this big flush, right, on SPY or Qs, and then it's like instantly people are starting to hammer long, what are they going to do? They're going to dump all this heavy value stuff, right? And so that becomes my biggest concern. And so here you are, right, on Palomar Holdings. I mean, it's a good spot. It's a good safety place. If the safety trade unwinds, I think that becomes more of an issue. I don't know this company specifically, but I think you have to know that basic risk. 87.14 is this level that I'm pulling up right now. And I think this is interesting. So you just had earnings literally right now.
Oh, that's probably why he's asking as well.
Yeah. So this morning, so you have earnings right now. Oh, this is perfect timing. So you're right into that zone that I just pulled back right here. So this is similar. You're not in breakout mode. It can pull back a little bit, but you don't want to see this pulling back too much. Breakout mode is going to be over 96.50. We'll just say that.
96.50. Okay.
Yeah. So 96.50. Take like a little line. If you're not in it, that's fine. If you are, all good. If you are, 87 is what you want to see this hold. Take a little line. 96.36. Right click. Set an alert. Cool. You're in. Right. See that candle wick this morning? It's up there. It's really trying. It's going for it. You want to see this pop up over. Ideally, you want to see a net new daily open above and close above. But if you get a net new open above, that's cool. Like that's what you want to see. And you have a lot of room, like this big volume shelf. This is like that Palantir over 36. This is a decent move. But
okay.
Is this dividends? I don't know. Insurance.
I don't think we have a dividend.
It should have a dividend with it. This is 213 employee company.
It's a 2 billion market cap. Does the company like that give a dividend?
No.
Yeah, it's 0%.
Well, I mean, sometimes, but this does not. 215 company employee. Okay, you have another one.
Can we do NIKKEI and this reversal of 10%? Because I have no idea why the hell we reversed, but this is exciting.
So this was off the lows. So I'm looking at futures right now. So NKD is the Nikkei. Did you buy anything?
Japanese index for everybody.
Did you buy anything?
Oh no, I wanted to talk to you about as well. If you're buying any Japan, no, I didn't buy anything. But what are your thoughts on Japan in general for the audience?
I think I'm gonna buy Toyota. Actually, I didn't buy it yet, but it's a good level. So Nikkei here. This is the massive sell off that we're talking about. Big old. What is this? 26% in a month or more. And the circuit breakers hit after, I forgot what percentage, but that 1 day blip is a 13% move from this low to this high. This is similar to where we could be, right? This is not a new high, quite frankly, right here. But what they want to see here and the best case scenario for us is in a similar situation is you want to see these lows really hold, right? And so I'm going to drop down a little bit here. So
if we don't hold on this, the U.S. market's coming next, essentially. Or it's possible the yen carry trade has more pain in it. It's not.
Yeah, and the hard thing about the yen carry trade is that we don't really have we don't have anything that's saying like, oh, this much of it has unwound so far. So like, there's no metric out there to say like this many people. These are the people that were borrowing and purchasing. We just don't. That data is not out there. So we have to rely on like JP Morgan Desk and stuff like that. So this is, I think this is where ideally this chops around that 3280 level on the Nikkei futures. NIKKEI, what is it going to be as a ticker?
Honestly, I have no idea. The only thing I know about Japan is they have a lot of anime. That's it.
NKD. That's what I would use, right? So somewhere I would like to see it kind of base somewhere in here, and it's not going to be out of so now we have a range. It will be out of the woods if you see like headlines Nikkei over 35,000 is going to be like, all right, you're in the clear, you're a buy, boom, it's going up, right? You're going up, and you're going up probably to like 38. So 35,000 on the Nikkei, that's the level. That's it, right? And so in the meantime, it can come down to 32.5 and still be valid, but you don't want to see 32K break. You just don't, right? But you see Nikkei holding over 35, then to me, I'm like, all right, I'm buying Toyota, right?
So you're buying good Japanese companies because of the rebound, essentially.
Yeah, basically. So like what's on fire sale, right? If the stock market's got Prime Day going on, and that's what's happening over in Japan. Their Prime Day sale is really like it's Toyota to me. So again, apologies for the lines. It's clearly all the blue, yellow, red is lost, right? We know what these are: 200 day, 50 day, 20 day. We haven't run into a chart really that has this purple line on many that you've requested, but this purple line is significant. This is a 200 week simple moving average. That's the lowest simple moving average that I'll ever use, and that's where Toyota actually just went to. So when you lose a 200 day, you typically go to a 200 week. And that honestly, if I were just to take this off, and this is to me, I'm like, okay, Toyota's like the best selling vehicles out there. Eventually Toyota's going to release the EV 4Runner, and I'll probably buy it. And we're really close. So I'm looking like this 155 area. But if I do buy this is something where like, I'm not really planning. This is put it away in a drawer and forget you own it for a while. Kind of thing, because this doesn't really trade.
And you don't really care too much about the fundamentals of Toyota and Nintendo. You're just buying good Japanese names that should rebound. That's your argument.
Well, yeah. So I mean, it's like I say, it's like I have Rivian, I got Tesla. I might as well have Toyota, man, because I'm not buying Ford. I'll tell you that, and I'm really not into GM or Stellantis.
Okay.
So that would be my trifecta of the vehicle manufacturers.
And Toyota has a dividend apparently of 4.34%.
Yeah.
Okay.
Is it paid in yen though? Because my brokerage is not. Because that would be maybe a problem.
Dude, there's so many memes on Twitter of like a guy talking to a girl, and he's like, "So the yen carry trade." And like, I want to try that out. I want to go to a girl and be like,
"Hey, but this is to me. I would look at this like Toyota is not a broken company, right? Like to me, it's not. I just don't think it's a broken company."
I'm brown, so I have to defend Hondas against Toyota Camrys.
What do you mean you're brown?
Well, that's what Indians buy. We buy Honda Civics. We don't buy Toyotas. So,
do you?
My sister
is Honda a company? Is that?
Is Honda a company? Yeah.
HMC. It is. Let's see.
Oh, I've never looked at their stock, dude.
See, you didn't know.
I wouldn't buy their stock, dude. The cars.
I don't think I would either. Maybe a motorcycle.
Yeah. Okay. A clean spark. We gotta do that one because people.
Dude, I was looking at that. Do we have any of like our crew in here? Who is asking for a clean spark?
People.
Clean spark. So these are clean spark was one where like I almost took this, and then it's like no, I think the chart broke because it had been doing this kind of round trip, like really like reliable round trip. You could buy this thing at $15 and sell it at 20. Like I don't know, countless times.
You know, I had options on this. I got rid of this in January, made 10%, and I thought I would miss out on the whole Bitcoin run, but this thing stayed flat for the past 6 months. So.
Yeah. No, I think there's a lot of people that like this miner, but I will tell you, like, first of all, I'm a crypto guy. I would much rather see you guys buy something like ETHE over this like all day long.
Why?
Because it's real. This is a Ponzi scheme.
Hold on. You need to mine the Bitcoin somehow.
Dude, don't give me that. This is a Ponzi scheme. Just like MSCR is a Ponzi scheme.
No, but it's a real company. What do you mean?
No, dude. You don't know that. Riot's not, right? Like Riot, we know had issues on their servers. Like they're not ever, no, right? Like Riot has shut down half their server farms.
But the miner is real. Like they mine 20,000 Bitcoin every couple of months or something. So like, is that fake or?
No, that's real, but it doesn't mean that they're taking that profit and putting it in the company. Who told you that? That's not how that works, right? Like that sorry, I'm joking, but I'm not joking. But like it doesn't mean that that's their profit. Like so Bitcoin, I'm a believer there, right? But the transaction fees and validators and things like that, and the miners, like there's an expense for sure. But it's all about like, look, they just got halved. Like they got cut in half of like what they're mining. Their cost is the same. It's actually going up. And half of these guys end up diluting, which we know. I don't think these guys actually have.
No, so they did 250 million a couple of months ago. So
okay, so like that's probably not even that bad compared to their peers. But I mean, it's not like a business. Look, if you're into crypto, I would strongly suggest you actually go buy crypto over a proxy that you don't know what they're going to be doing, or like you don't have a.
If Bitcoin goes to 100 grand, though, do you think this runs? This doesn't.
No. So that doesn't work this way, right? So like if Bitcoin goes to $200,000 and the S&P 500 is at 5K or 50,000 or wherever it is, 550. Clean Spark's not going to catch that.
Really?
No.
That is a contrarian take. Most people think Clean Spark runs with Bitcoin.
It has, but that's because they haven't been buying Bitcoin since $1,200, like me. Like to see like all this stuff. Like it runs, but it's not the same. And their pullbacks is brutal.
Their pullbacks are brutal. That's great. Now, in fairness of Clean Spark, I think their management is top notch. I actually spoke to these.
So I don't know Clean Spark that much, but I would just say if you're trying to buy it as a proxy play, like you can buy actual crypto now, right? Like you can buy it like ETHE would be like and right now you're getting a huge discount, I believe. I'm just gonna guess on the Grayscale.
Would you like MicroStrategy as a proxy to Bitcoin? If not,
oh, dude, if I was gonna pick one that's an actual Ponzi, that's probably the one.
Wait, Ponzi or proxy?
Ponzi.
Oh, you think MicroStrategy is a Ponzi as well?
Well, how is it not?
Well, Saylor's really a nice guy,
right? But he's borrowing money. Possibly in yen to buy.
That's how he's buying his Bitcoin. It was Saylor who's fucking up the economy.
That son of a bitch. Right. Sorry.
I didn't know you were this serious about the Bitcoin proxies. I thought you were a fan of them. Interesting.
No, I think there are people. Oh my goodness, where is the? Okay, so this is Grayscale website. So I should have nav.
Who has Clean Spark in the chat that's upset at Jason right now? Put it in the chat. Let us know. Let us know how much you hate Jason for shitting on Clean Spark. Oh boy.
I think it was a thing like it actually. Why can I not see this? This is supposed to give me.
It always
is this
sucks.
saying that this is par? Is this saying it's trading like legit at par? It is. Oh no, because usually there's a disparity between NAV and net asset value and the price.
Dude,
I think something's wrong. But you go to grayscaleetfs.com here, and I'm just going to drop this in the chat. You go there, and then you could pull this chart up.
I feel like the ETFs are the biggest Ponzi, dude. They do nothing and they take a management fee. They literally do nothing, bro.
I can't post in the chat. They're not. The ETFs are not actually ETFs; they're ETPs.
Correct.
So there's a difference, and that's why they
it's the easiest management fee ever. They do nothing other than buy and sell it every day.
Yeah. So I think CleanSpark could bounce. It's been making this round trip. Hey, look, from a trading perspective, I almost took that. I was about to take that, and then it failed epically 15. I'm like, whoa. Let's not touch that right now. But earnings are coming up. We have to wait. I have to wait till earnings are done because you're gonna have a lot of volatility built into this. Are we good on time? I'm okay to go a little bit long.
I can go a little bit longer too. There's one more or two more names if you want to.
I have fun hanging out with you, dude.
Dude, I enjoy it. Okay,
guys, for like if I'm crapping on your side, I'm really sorry. I'm not intending to. I'm just raw.
Oh no, dude, I don't give a shit about it. Dude, you could crap on Robinhood Pound at the end of the day.
No. I mean, like, but so CleanSpark moves a lot on it. Look at this, 32.9% last 2 quarters ago, 22%. So I would actually wait till post earnings and see if it can reclaim that 15, and then I would hammer it, go right back into this 30 to 20, 15 to $20 range.
Okay, so everyone make sure to follow Jason because he's staying around with us for a little bit more and doing some extra tickers. So please make sure to follow him there. Real quick, Jason, last question on this. Then I want to do.
Hey guys, don't call me a perma bear. Somebody was called. I get all these DMs. You're a perma bull. I'm like, no, dude, I'm not. Now I'm sure I'm gonna get the one. You're a perma bear. I'm like, nah. I will flip. I will with the market. I will just I go where the market goes.
Okay, so real quick on this, and then I want to do IWM after this. What's his reason for CleanSpark not to run when Bitcoin goes to 150?
Because in order for the miners, it's very similar to gold miners and gold, right? So you would think that with gold running to all-time highs, that GDX, which is the gold miner ETF, that gold miners would have run to all-time highs at the same time as gold. Guess what's not nearly close to the all-time highs?
I didn't even know there was a gold miner ETF.
Yeah. You didn't?
I didn't know that.
Yeah,
I know what GLD is.
Here's gold, right? Here's the gold miner ETF. So in order for these underlines, Bitcoin's profit is transaction fees, validation, stuff like that. That's real. When you start dealing with stocks and companies, they have earnings that you have to get through. And Bitcoin doesn't, and similar to gold, there's no earnings on gold that you have to deal with that can really mess up anything. And you have to have the market also in that same kind of uptrend. So it's going to be very dependent. Look, if the market's taking a dump, but gold, the underlying asset, and we're not talking about Bitcoin, but just as an example, so to the question, or JNUG, right? The junior miners, oh God, no, that's a leverage ETF. Come on. So the junior miners or the big miners, they need the stock market itself to be in an uptrend also. Otherwise, they're just not going to get the love. And it's no different, right? It's just no different. And so, I mean, that's there you have it, right? It's similar to Coinbase comes out here when Bitcoin makes an all-time high. Bitcoin makes an all-time low. So if you think that the miners, I mean, I guess it would have to be similar. By the way, I'm not there yet. That's 44.
You have I'm drooling. Did you buy 49 or no?
No, I think we bought here and then we were talking about here selling here. I saw this and I'm like, I don't think so. No, I'm not gonna. I didn't buy this. I think we get another weekend. That's ugly. One more or two. What am I looking for though? Come on, mate, you're distracting me.
DDXJ. Oh, you're looking for the.
I'm looking for some lows, right? Some like recent lows, 2024, 37K lows on Coinbase, right? Some relative.
That's when Coinbase was like $50. I think.
Is it though?
When Bitcoin was at 24,000. Definitely was not in the 200s. That's for sure.
Anyways, so you have to go back and do this kind of stuff.
Okay, so if you don't believe in CleanSpark as a proxy, what about Coinbase? Do you believe in that as a proxy? Because that's like actual revenue on transactions.
I believe that the market believes, but no, I at the end of the day, they're all going to have their own merit to stand as their own underlying asset, right? 2022.
Gotcha. Okay. IWM. That's the second to last one.
So, okay. By the way, so this is 2022. What would you say? Bitcoin, December 2022.
Oh, wow. So it went
December
flat.
2022, right? January 2023. 2023, we're going up. Where's Coinbase? Dumping. So I think they can have their own issues, is my point. Right. And they might be proxies for a time until they're not, is really what I'm saying. Right. Like,
okay.
So
that is fair. If you guys believe in Jason, you're gonna sell out of that stuff. If you don't, you're buying, saying fuck you, Jason. I'm buying more.
You can say that's all good, right? These are like just opinions. What's the other one?
So actually, before IWM, LUMN. This thing is up like 100% today.
I don't know. Is this biotech, right?
I don't know. Douglas, if he's in the chat.
I saw massive options coming out on this too.
I think it's an AI thing. It's a infrastructure play on AI. I don't think it's biotech at all. LUMN Technologies. For those asking about SMCI, we talked about it in the first 20 minutes, so you'll be able to go back and see.
What we said was don't look at it after hours. It'll make you cry.
Yeah,
that's for sure.
Don't look about it.
Network AI. So
it's some AI shit that's running.
Yeah. So there are a couple of companies like this, not many. And I think that
dude, it's up 130% today.
I think there are a couple companies like this, not many, that this is the AI thing. There are going to be many, many losers and few winners, but there are a few of the at the application layer, which is what this is, that are actually doing well. And I think we're at a point where we might see a lot of these start to emerge. Shut up. Dang one. Is that true? Is this CenturyLink?
LUMN Networks is CenturyLink rebranded. Huh. It's the old broadband.
If that's true. No. If that's true, CenturyLink was a data center also. All right, I'm getting yeses. Okay, so if that's true, CenturyLink is, it's broadband, it's data center. It's where your SMCI Quest, it's where SMCI lives. Like you buy your server, your Dell, you buy NVIDIA. I own one of these. I'll tell you, I own Equinox, EQIX. But so this is where this is a data center, like this should say REIT if this is right.
A data center. So you're investing in a data center with LUMN. Interesting. $5 billion market cap.
Is there a dividend?
There is no dividend. 1 billion shares outstanding. So this thing had some movement today to go up 100%.
Yeah. And this.
Why is it running? Does anyone know why it's running? Did they have something happen?
Is it CenturyLink? Because CenturyLink is kind of shady, dude. I'm not going to lie.
Okay, so.
They were. But maybe they got their act together.
Oh, they said so. LUMN said they're in discussions with a telecoms company to
They're
get
always in this. That's CenturyLink. That's what I'm saying. That's the kind of stuff they used to do.
Oh, they secured $5 billion of new deals. They announced that today.
There you go. Yeah. If this is CenturyLink,
I mean, I guess that is a successful rebrand.
okay, so next gen on-demand connectivity solutions, so fiber network, so fast-paced, ultra, despite challenges, they maintain sequential year-over-year growth. Q1 product TSA agreement with creditors significantly strengthened the balance sheet, providing securing over 2.3 billion net new liquidity. Cost reductions, strong sales Q1. Key hires, board additions have been made. Dramatic year-over-year improvements. Well, NPS, that's whatever. So if it's network as a service, that's interesting.
Does
it's
the
like
chart
SaaS. It's like SaaS, but like if you were to outsource, or like AWS, but you're outsourcing your network stuff.
Okay, so does the chart at all look interesting, or is this run just you don't chase this run now?
I think you have to wait.
Yeah, I mean, there's nothing. I mean, if it's up 150%, you wait.
Well, no, so like you get this. It's so these simple moving averages squeeze. You go right to 725. I believe that's right where we stopped, right there. That the 200-week simple moving average. So you're gonna need to let it breathe, for sure, and that's gonna put you right over here. God, if that's CenturyLink, good for them. But there you have it. You are bouncing from the dead.
Okay. Can we?
So give it a bit. You got to see this. You got to see this really. Like if it's a real recovery, it could be a real deal. It could, because it's not a fake company. CenturyLink was never a fake company. It's a real company. But you want to see it, like, you don't have to chase it. But you want to see it holding for a while, like really over 10, that would be ideal. But like over 8, you're like, okay, slow chop to the upside. It's not like there's not a lot of room. Quest, is it Quest Services merged? Quest Software? Quest Software is not a small company.
Yeah, maybe. Okay, so we'll get more clarity on that. Can we do AMD? Because this one has just collapsed badly. But maybe this is an opportunity.
No. Well, maybe. I think it's going to depend on it. I think it has a date with 110.
A date with 110. I'm going to start saying that about stocks. A date with a number. I like that.
I'm not trying to.
Robinhood better have a date with 20 tomorrow.
Dude, I want that 28, man.
Dude, if this stupid fucking Japanese nonsense didn't happen, fucking the anime people ruined everything for the United States. If that didn't happen, Palantir would be at 30 by now.
I am Japanese, by the way.
Oh, you are? Okay, so you fucked it up. I'm telling you to your face. You fucked up everything.
That's funny. So it's similar. Well, I guess all the charts are kind of similar in terms of they've all been in uptrends. They're all broken, right? I'm half Japanese, guys. It's not like so the Japanese people say I don't count, but the white say I don't count either. I don't really fit in anywhere.
What Japanese and white or Japanese and white?
Yeah.
Okay, cool.
Okay, so
I dated a girl who was Filipino and white.
It's not the same, dude. Come on.
No, I know it's not the same, but like the Asian white is good-looking people, dude. You're a good-looking guy.
You should see my son, dude. He's gonna be troublemaker for sure. He's off the hook. Anyway, so we've lost this. So this is where we're talking about this squeeze earlier when we said when I was looking at this and I was looking at like, hey, these are all really tight. Simple moving average is very tight. It was over the 200, and it was looking like we could have a pretty nice bounce. It's weird, we got it. We got the move, but what happened, and we got the target, so that trade was done. But we quickly came back in, and this is what you have to be aware of, this kind of setup, and you failed heavily. And the problem right now is that you still have the same setup where when I was saying before that, hey, look, these simple moving averages are very tight. And when we get that range expansion of those simple moving averages away from each other, you get very large moves. And we're there, right? So like we're well below all these stuff. And now this 200-day is expanding downside. So I think this is one where you have to be very cautious. I have 132 and change. Let me see where it is. And it opened below today. And it closed below today.
Wait, you had 130 what puts? You said?
Oh, dude, I have 125 puts on this right now.
Okay, so you have puts on this. Okay.
Yeah, I have 125 puts on this right now. So, but I also had those coming into the weekend, which I ended up closing and then reopened. I actually opened them as a hedge because I had some longs on Dell and AMAT. And then I was like, oh crap, I got to hedge this. So I instantly opened some AMD puts.
So you don't think the earnings was good? I mean, the earnings was good, but it wasn't enough to fight the trend to the downside.
Right. Fundamentally, it was what was the word that they used? Like a rounding error in the scheme of things.
Right.
And I think AMD is great, but like if you're looking for like a catch up trade or a second tier player, look, first of all, it will be AMD, but it's always going to be a second tier player. But the valuation right now, like we talked, were you on that last? I don't know. I was on a space or something. We're talking about how do you value these? You look at this compared to NVIDIA right now. I think at this point in time, AMD might be more expensive than AMD or than NVIDIA. But regardless, the fundamentals don't matter for technicals to play. This little blip here, this is that last low. So this is what we kind of call like a change of character, COCH. And that is 133.30 right here. So 133.30, that was that last low right here. We got to open and close, I believe, below today. Yep, today. So today in the pre-market it looked good, but the actual first trade, and this is what I mean by like open and close below. If we get something like this, oh no, it's a close below.
Where is it after hours right now? AMD. It's at 128. Okay.
There you have it. 128. Thanks, SMCI. But I knew that semis were going to have a big move regardless, right? Like, and I strongly felt that was the SMCI was going to move a lot of these guys in general. And I have some upside bets on. So I don't ever want to go like completely one-sided. And if I am, I'm lighter. Anyways, it's this 133 level on AMD to me that like we really needed to hold over. And it had been fighting with this. I think this is Friday. I actually was short Friday for the same level coming in. We gapped down. I closed my puts here, 125 puts, closed them here. We bounced. And then today we opened strong, but it's like you push back down. This looks downside to me. In near term, it's going to be a couple things. So near term, look, I'm just going to take a little bit of this piece, right? And so in reality, I'll probably end up closing the majority of these way before 110, probably near this 120 level right here again, and then seeing if I can lock in another lower high.
And if it gets there, you think NVIDIA follows it or NVIDIA is separate?
No. I think this is moving on its own, different than NVIDIA right now. I mean, first of all, AMD's already a very funny case, right? And I think what happened, and to his point, there was a headline out about the Blackwell, right, getting delayed.
Yeah.
And I think that pushed AMD to the upside yesterday, but it was already on a downside trajectory. And so I think all that said and done, it's like, look, even if Blackwell is delayed, they're still going to be selling the current version. And AMD's still not going to have enough, like they're not going to be ready to go to outsell or to sell enough to make a huge discount. I don't think, I don't think it's Intel new. I don't think AMD's Intel. I think that AMD is a great company. I don't mistake that, right? Like, I think it's a good company. I think it has a good play. I definitely don't think that the play for AMD is in the data center. And unfortunately, I think the market thinks it is. To me, the play for AMD is on the client side and the new devices that are coming out.
Correct.
It's not that big of a market that AMD has. I just don't. It's just not. But eventually, yeah, maybe there'll be a player in the data center. But like, guys, that's a long time from now.
Okay, last thing, Jason, because I know you're tired. Yeah, IWM. Let's do this.
So IWM, I said, look, if this is below, dude, I've fumbled this IWM trade so bad, you won't even believe it. Did anybody tell you?
Well, I know you have 285 calls.
Yeah, and as we were getting here on my timeline, I posted hedges like are locked in. So I'm monitoring this, and you guys should follow just from like a technical perspective. I'll try to post some kind of updates, and you'll see like certain things like I bought recently, like but Chipotle was a recent buy, things like that. But this day. Really? This day was the 29th. I was looking for the breakout. No breakout. So I was looking for this to actually break over that 226 ahead of FOMC. So a lot of times you get really close to the events, and the events are there's always a risk of the actual event becoming a sell the news event, no matter what it is, right? If you get to the event, the thing is that like as an investor, as a forward-looking, stock markets are forward-looking. Once the event happens, you have to think of, well, what am I still here for, right? And we talked about this, and I'm going to do a little like debrief personally on me for IWM. Is like a lot of times, your target has been achieved. And I think that if you really think about IWM for a little bit, when we talked about looking at this prior zone, it already was a great trade. So maybe we're probably pressing the gas, pressing the bet a little bit too far, right? Because this was a big move. It already had been a big move. So that's to be fair. And so now the question is, and when I had a hedge, Amit, you're gonna die. I had an August 16th 212 put, because what I told you was if it fails, where this is gonna head is it's gonna be 212. Right. And if it gets below 212, then I'm just wrong. Right. And 212 is going to be in here. Something like this.
212 right after FOMC, right?
Yeah, I fumbled so bad.
Wait, so how'd you fumble? What was the fumble?
I fumbled because, and maybe other people do this, we're in the midst of FOMC, and I'm like, okay, if he's gonna say something bad, here's FOMC. It looks great.
Yeah,
the day's ending. All right, we're good. We're off to the races. I'm gonna close my hedges. We're done for the day. See you later. Bye. Kabam! And it was just a freaking bloodbath.
You close your hedges literally
I closed
seconds.
them at the worst possible time.
Wow.
And they would have covered every bit of my losses.
What? So the hedge, was it the same size as your call?
No. It was smaller.
The hedge was much smaller, I would imagine.
Yeah, hedge was definitely smaller.
But it would have covered all your losses, is what you're saying.
Mm-hmm. Yeah. This is sad.
So are you bullish now? You think Tom Lee was just too early, or?
I think he was. So the charts told me that this was going to happen right early. And then they told me, no, they're not going to happen because we get this Bart Simpson setup. But now it's like, okay, so what to do? This actually came back all the way to my original purchase price, believe it or not. So I'm not down on the leaps. I will say right now, if you're in those, I'm not down, mostly because this move to the downside has increased volatility like massively. So they're not down because the volatility is really up. I think they might be down a lot more. And I think there's a lot of issues right now with buying leaps because of a situation like this. I think they're still a little overpriced, but that's probably okay. Because if it gets back up, I need to see it get back up. I really need to see this get back over 214. It has to get over 212 soon. Right now, this was that last base. I had 195. I was like, okay, this is the absolute shit show that this could happen. And if I know IWM, it will probably just this 200 week and this 200 day simple moving average breach 200 and look really ugly for a little bit. And it did. Right. It actually got below 200 again, right into that 195 area. So from here, I need to see this old base. And this is that last CPI meeting right here. Right. So we're at a critical juncture. So this is where that last CPI report came out right here. And so this is going to be 203 right now. I need to see this week close over this 200 level for me. I got to see it. Otherwise, what's going to happen is that this might still be a valid trade. But the thing is, even though I have June of next year, it could be chopping and this could go sideways for like 2 months.
Yeah.
And what could happen is that the stock might not go down, but my options that are more than 100, they're June of 2025, they might get cut in half just by that decay that we were talking about earlier.
Right.
So
I still think Tom Lee's going to be right about this.
So my thesis, my personal, so Tom Lee aside, and I think, you know, in retrospect, I can look at myself and my trade here and be like, look, maybe I got a little bit too much of a lot of people were super bullish. So maybe I got the group think going on.
Right.
And you have to be open-minded at least enough to say stuff like that. But, you know, it was always a Q4 thing. And I think it still becomes a Q4 thing. This is still a rates thing. The problem, like as we get closer to September meeting, I don't think that we're going to have an emergency Fed cut.
Yeah, I don't think that's I don't think
oh, you guys covered that. So like if we were to have an emergency Fed rate cut, like now,
it would be scary to the market.
No, the Fed would lose all credibility.
Yeah.
Like this week, maybe next week, but this week they would lose all credibility. We're currently pricing in 71% probability of a 50 basis point rate cut for September.
My only fear is you've been through this cutting cycle stuff before. I think the earliest was 2018.
Yeah.
When they cut things go up, right? Like that's how it works.
No,
but in 2018 they cut and we recovered 30% in the next 5 months from that December 2018 bloodbath going into
after dipping, right? The actual cut is a sell the news event. It's a sell the news
why
event.
Is the cut bullish for IWM?
So there was an emergency cut that was not. There was an emergency cut that wasn't a sell the news event actually. But I think it's like who was I with? I was with the crew. It might have been another Spaces crew. We were like, Powell's like edging the market right now. He's getting closer to the edge, like as close to as he can without actually doing a rate cut. Because once he does the deal, it's just like it's gonna be a big mess. And things are going to have to like rebalance a little bit, right? The actual rate cut itself is typically a sell the news event, but it's a short-lived sell the news event, right. Similar to like the halving was a sell the news event for Bitcoin. I don't know if you know that.
Yeah, you're right.
Like WWDC was a sell the news event for a day, right? So you don't need to be there, like ahead of the thing. Like you might be able to get there after.
But you think rate cuts in general will help the small caps, which will create.
Yeah, that thesis for me is still there, right? The thing right now is like the yen carry trade, the 210 yield like unwind, geopolitical risk, and the NFP stupid BLS revising basically all last year away. Like spurring these recession shenanigans. Like I'm not in the recession camp, but if there is a recession, like let's like to be devil's advocate to myself, if there's a recession, this ain't happening, right? Like there's a shortage of money. XPI is not going up, right? Like they're not getting money. They're not getting funding. Like, you know, it's not, if there's a real recession, it's not happening. So that's the real risk. And I think that because there's like that argument still, like, I don't think that's real, but you gotta be open-minded enough to at least say, okay, this is where I'm wrong, right? Like if we're at stagflation, it's not happening.
Yeah. The small caps, they can't survive if we're in a recession. So.
Right.
And I agree with you. I don't think recession requires massive unemployment, at least to an extent, more than 4.3%, if that number is real, to really see consumers weakening, which hurts companies in their earnings.
What did Meet Kevin say about Tom Lee?
Meet Kevin has been creating.
I like Tom Lee.
Tom Lee blocked Meet Kevin, dude. He got so upset at him. He on Twitter. Yeah. Meet Kevin's just been calling his bullshit. He's like, well,
is he a permanent? No, he can't be. But
yeah, I think Meet Kevin pissed him off when he called him just like an idiot, essentially, for saying small caps will do well. So like, he's vehemently against Tom Lee.
Well, what's true is like they did do well. So when I look at this as a trader, I have to look at this objectively and be like, I gotta say, like, did this already meet your target? Like target acquired, trade complete?
Well, the problem is Tom Lee said 300 on this damn thing, so that's why everyone's,
he got halfway there. Well, not halfway. He got a big move. It's a big move. And he said it was going to be a 5% move post FOMC. He just forgot the minus 5%, plus or minus, because he got a 5% move. And it was in small caps. That was the biggest mover for sure.
Last question for you, and then I'll let you go. Jason's Twitter right here in the chat, guys. Is there any world in which this rebound yesterday and today was a dead cat bounce from the Monday apocalypse that we had?
Oh, for sure.
Do the technicals tell you it could be a dead cat bounce?
The technicals tell me it might. It likely is actually. Like I said, like we filled this gap. We just basically turned our old support into resistance today, and we have one more last flush to get the bad news out. I don't think there's much more to go. Right? I don't think so. I could be wrong.
We're trying to protect this market, dude.
Well, I think Palantir is a good example, right? So like, if there are going to be all these companies that are going to, like, still smaller companies that are going to be report. I don't know what percentage of the small caps have reported, but it's not a lot, right? I think as we get deeper into this, and then the rest of the companies start reporting, we're going to see companies that will revert to where they were, and there's going to be some winners and some losers. And at the end of the day, we're going to have pulled out a lot of the weeds, and it's going to give us a better baseline when we're done with this, right? But it's sell Rosh Hashanah by Yom Kippur. Yom Kippur is October 8th or something this year. When's Yom Kippur?
I think so.
Yeah, it's early October.
11th, October 11th.
Yeah. So if you want to just trade by the calendar, that's your day. But other than that, like it's going to be a little tough. It's choppy. It's choppy right now. This is a good week to take off anyways and let the dust settle, and then see where we're at next week for sure. And things will be a lot cleaner. But yeah, it is what it is, right? I think if you're, depending on your time horizon, if you're a long-term investor, if you're medium to long-term, you should be kind of excited about getting a little bit of a dip to buy, because I still think Q4, but in between now and then, the next month or two might be a little bit more pain to go. A little bit more pain to go. Look, if you're still alive, congrats, because you've survived a lot already.
It's the first drawdown we had in a very good year, and it's kind of a healthy one. It's a needed one, but it sucks.
Yeah. And what I don't want to see is I don't want to see recovery too fast, right? Yeah. That's not going to be good. Yeah. So we a little bit of a rest here is probably the best thing that we can see.
All right, Jason, thank you for spending 2 hours, basically 3 hours. I talked for 30 minutes. You talked for 2 hours 30. So everyone appreciates you. His Twitter here in the chat, guys. Check out his Discord from the Twitter.
Kathy ruins everything.
Yeah, she bought Robin.
Did you see that? What the Moderna? Really?
She's buying this company called Tempest AI. It's like this healthcare AI startup.
Did you see Moderna's cash burn, man? Come on.
They can't sell the COVID vaccine anymore. So
I know, and they're burning cash like crazy. I don't know.
Yeah. If you want Jason's like Discord, his groups, all that stuff, again, all of that's through Twitter. So please make sure to check him out there. And he'll be back next week, and we'll try to
on Twitter. It's just like the link at the top. So appreciate you guys. And I'll see you next week, man. It's been fun. I always enjoy this.
Yep.
See you later.
I'll see you next week. Bye.
All right. Bye.
All right, folks. That's it for me. I still believe we have a Daily Palantir video coming out in an hour. I'm pretty sure that'll be out today. If not, it'll be out tomorrow, but I'm pretty sure that'll be out a little bit later today. Breaking down the earnings, all my thoughts on that, because I have a lot to say on the earnings, so we'll go deep in that. And then tomorrow we'll be back for the market open. Tomorrow's a big day. We got Robinhood. By the way, I got to show you guys something. Let me show you this shit. This is so you guys know the startup I invested in, Figure. I mean, I don't know if it's gonna work or not, but the CEO has some fucking balls, dude. Look at what he just tweeted under Elon's. Elon said, "Bring it on" in March to Figure when they raised $675 million. Brett Adcock, CEO, he just quote tweeted that 5 months later. And he said, "Look at me. I'm the captain now." And that's because they just released their newest model. I mean, dude, you got to have some balls to post something like this, especially because Elon has his minion of Tesla followers who are going to basically kill Brett for saying this. But, dude, I mean, look, either it's extreme narcissism that is so cocky and the startup will implode and my 25,000 goes to zero, or this motherfucker is actually going to pull it off. And he's going to IPO this company. It's going to be really big. But, I mean, you got to have some balls to post that. So I saw that while Jason was talking. I was like, oh, my God, I couldn't believe he actually posted that. By the way, I know what movie this is from. It's from Pirates of the Caribbean. Nope, I'm just kidding. You thought I was just kidding. It's from Captain Phillips, even though I thought it was Pirates of the Caribbean. I had no idea what this movie was from. But it's a good guess. Pirates of the Caribbean is not a horrible guess. But, yeah, so in general, tomorrow's going to be big. We have Robinhood earnings also tomorrow. Let me see what else we have. Robinhood earnings are after the bell. That's going to be a big one for me. Look, I think the stock gets back to 20. I'm probably wrong, and we maybe get to 1850 because macro stuff. I just think if the numbers are good, eventually the stock will reflect that, even if it doesn't do it tomorrow, because like the numbers have to be there for the street eventually to buy. But they don't have to buy tomorrow, right? Now, Palantir was able to get them move after hours, and then it came down a little bit today in that $26 range. But I think if Robinhood crushes, you get closer to 20 or 22. I just don't know if that's definitely gonna happen tomorrow. Tomorrow after or before the bell, we have Disney, Shopify, Sony, Lyft, CVS, and Novo Nordisk in the morning. After the bell, we have Duolingo, Robinhood, Monster Energy, Warner Brothers Discovery, Virgin Galactic, Joby, the airlines, and Equinix. And I think that's it. Oh, and Zillow. And we have Zillow. So we have some big ones throughout the entire day. And we'll see. Substitute Z, thank you for the super chat. Have a great day, mate. Truly thankful for everything you do and stream. Palantir, baby. Yes, thank you to you as well for joining the stream. I got a bunch of DMs yesterday from a lot of the people who are deep in Palantir. They said, they're just appreciative for the stream. Dude, we had 6,500 people on the stream, so it was a fun stream. Thank you all for joining. I was told a bunch of Palantir employees were watching the stream as well, so they were excited for it. It was fun. It was a real big community event. Palantir crushed their numbers, and I think the stock's going to reflect it. My price target now for Palantir is 35 by the end of the year. I raised it. It was 25 before these earnings. I think if the macro does fine, I think 35 is reasonable. Do I think 35 is overvalued for the current growth? Yes. I think we have to get closer to like 32%-ish top line to justify 35, but Palantir is always going to be overvalued. It's a question of, where does the puck stop in terms of how the street's willing to interpret the numbers. And I think we're going to get 30% year-over-year growth in the next couple of quarters. I mean, we're at 27%. We're not deaccelerating. We're going to get 30% top line growth. Adjusted operating margins are at 37%. That's going to be 40%, I would say, at least in 2 quarters, maybe the max 3 or 4 quarters, maybe a year from now, because they have increased it a lot. But getting that extra 1 or 2%, that makes a world of difference in the EPS. That's why SMCI is down so much. SMCI is down because they raised their guidance, but they lost 4 percentage points on their margin. So they're not making any profits, or they're just not making enough profits for the street. So their EPS sucks, missing by almost $2. So that's why they're down, but their guidance is good. And that means it's good for NVIDIA, because NVIDIA's margins are not 11%, they're 77%. So I think they're more of a proxy on understanding where NVIDIA is going. But overall, I think tomorrow should be exciting. And I think if Palantir gets back to 30% and then the 40% adjusted operating margins, Palantir, $35 end of year, is not crazy to say that would be the case. So we'll see. We'll see if that happens. SMCI is down 12% now. Yes, SMCI is down 12%. I have a ton of Robinhood puts at 20 and 19. Look, I think buying Robinhood at 20 or 19 is not horrible. It's just a question of the macro. I really think the risk reward here is not bad, just given I understand, at least I think I understand the fundamentals of this company. Now, shit can hit the fan if Japan gets worse or if labor market gets really bad. But if that's the case, I think it's an easy DCA. It's not a hard DCA. You're not buying, Palantir at 29 and you're hoping they have a monster quarter, because the upside from 29 after a quarter like that is tough. But when it falls to 22, the upside is back to 29. Same thing with Robinhood. If you're buying it at 24.50 like it was 2 weeks ago, upside is tough. If you're buying it at 17.16, upside is closer to 24.50, just on like a reversion to that 50-day moving average that it was at, which is why I don't think it's a horrible buy right now. So we'll see. Tomorrow's going to be really important for Robinhood. Shopify is going to be interesting for the consumer. So Uber said consumers okay. Shake Shack said consumers okay. Bunch of companies today. Caterpillar said consumers all right. So this consumer narrative that's bad, I'm hesitant to say it's just like Starbucks and Nike brands are suffering, but you've got to ask yourself, why are people eating at Shake Shack and not McDonald's? Or the bear case to what I'm saying right here is maybe Shake Shack's a bit more expensive than McDonald's, so people that can afford Shake Shack are going to Shake Shack, meaning they're higher level consumers, whereas people who are on the lower end of the spectrum and they can only afford McDonald's and they're not shopping there as much, that means those types of people are struggling even more. So, I think there's so much nuance to it that the market can't fully come up with a cohesive thesis yet. But by Q3, we'll have a much better understanding when we get earnings for that. It is a bifurcation in the economy. That is correct. 100%. I mean, Chris has been talking about this for a while on the Market Open. Some people have owned equities over the past couple of years and they've made money. Some people have owned nothing. And when I mean equity, I mean stocks, real estate, crypto, etc. And so if you've owned nothing, you really just had your income, which has been getting eaten up by inflation. And we're talking about people who make a normal income, right? We're not talking about super tech engineers making $400,000 a year. We're talking about average person, 50 to 60 grand a year in the United States. It's and that's still not a horrible salary. I mean, like, you got a lot of people in the 30 to 40,000 range. So it's tougher for those segments of the population, and they don't have additional capital to invest in equities, which means, where's the upside for them? And if that consumer gets hit bad, then, we'll probably see that in more earnings. Dell is also getting hit. Yeah, let's take a look at after hours. So the SPY was down almost 1%. SPY is recovering a decent amount. It's down 0.3. It was down almost 1%. AMD still down 1%. LUMN up 38%. Robinhood flat after hours, just went down about 0.23%. S&P again down a little bit. Upstart, I still don't know why the hell this thing is up 18%. But congrats to you if you had Upstart calls. I mean, those must be printing after hours. Meta's down a little bit. Tesla's down 1% at 197. Palantir 26.21. Carnival Cruise, that's down 0.69%. SoFi. Oh, by the way, Tanner posted some news today on SoFi. That freaking SoFi lost one of their clients, and they lost like 5 million Galileo accounts, which is not good for SoFi. That could possibly be explaining the tech slowdown part of their business. Potentially Marqeta is who they lost. Marqeta signed a 5-year deal with Vero Bank, and I think Marqeta used to use SoFi. So if that's the case, then that's not the best for SoFi. What happened to SMCI? Again, the thing that happened to SMCI is they raised guidance very well, but their margins kind of sucked. Here's a tweet real quick on someone who used to own a ton of SMCI. He just added a lot more after hours. Here is his argument right here on SMCI. I just read this a couple of minutes ago. So he said, I sold 90 to 95% of my shares from 600 to 1200. I've been adding after hours. I increased my portfolio by 50% on SMCI. Margins are getting squeezed, but I remain bullish because they gave monster revenue guidance. Knowing the company and the management team, they're going to do more than 30 billion. They guided 26 to 30, which is a $3 billion to $10 billion beat. 12 months ago when SMCI gave their full year 2024 guidance, they said they would do 9 to 10 billion. They ended up doing 15 billion, so they beat the guidance by 50%. He said, I'd be shocked if SMCI doesn't do at least 32 billion by full year 2025. And so he's basically saying, look, I don't like the lower margins, but ignoring the new guidance makes no sense at this valuation multiple. This is what it means to understand a company. I don't know if he's right or wrong, but when you understand a company, like when you really understand them, you can look at quote unquote bad news and still buy because you know other elements to the picture that exist. And so, you know, if you believe the margin story in SMCI isn't the big story, but the broader story is guidance, then you believe that it is still trading cheap at 14 times revenue with 68% EPS growth after their full year 2025 guidance. And so you would end up buying if you believe in that argument. Dell at 90 right now. Yeah, Dell also SMCI nuked. They nuked a lot of the semis after hours, dude. Dell right here. When's Michael Dell buying Bitcoin? We keep seeing him tweet about this shit, but it's time for him to put it on the balance sheet. And get Dell to be a proxy play. So hopefully that happens. 10 to 1 split will help reduce the volatility. Wouldn't it increase the volatility? Because now you have the option chain explode with more people coming in. Maybe it would reduce it a little bit. Wow, down 11.7%. $36 billion market cap. 11% gross margins. I mean, that's the part that hit them the highest or the most after the bell. Okay, this is a good question. PK says, any way I can get audio only streams? I've been delaying this for the longest, but I need to like upload this stuff, like the stream every day as a podcast, like on Spotify and Apple, and I have not done that. It's just an extra like 5 minutes of work that I haven't done. So I'm going to try doing that starting next week and set everything up. And so Monday, I think we'll get all of these as audio recordings, probably posted like an hour after they're live on YouTube. And if anyone listens on their audio apps, you can play me in the car instead of having to watch me on the screen. So we'll do that. All right. I think that's pretty much it. Tomorrow's big day for Hood. Hopefully it goes well. If it doesn't, well, we'll see. There's nothing you can do on if it doesn't do well. It's like, all right, fuck it. It doesn't do well. We'll see what the number. I think Vlad's going to crush, dude. I don't know what the stock's going to do, but I think they're going to crush earnings. And I hope the market is not stupid enough to realize that this thing does not belong to $13, $14. And I think the market already knows that, but they're finally waiting for the numbers to prove it. I'll be live probably like 3:30. We'll do a preview for 30 minutes. And then at 4 p.m., I'll be clenching my butt cheeks, hoping that we get a nice revenue beat. The estimates now are 630 million. My bull case is 650-ish. A beat would be 640. That would be about 30% year-over-year growth. And I think they're going to introduce the new web trading app. I think they're going to do a bunch of like product announcements. I think it's going to be good, dude. I think Vlad's got us. But we'll see. And even if it does go above 20, does it hold, right? This is the hard part about this market right now. As Jason said, we need some time for this move to consolidate before we even think we're done with the pain that we had. So I guess we'll see. All right, that's it for me. I'll be back 8:45 a.m. in the morning. Got a lot of stuff to discuss on earnings tomorrow. And then we got Robinhood after the bell. And we'll keep going from there. All right. Thank you, everybody. Appreciate it. Love you all. See you guys tomorrow, 8:45 in the morning. Bye, everyone. Have a good one.